I just wanted to go ahead and type that in. I'll be back in 10 minutes, guys. I'm setting up a new computer. Hopefully, I could use it for this session. If not, I'll go back to the iMac. Yeah, it's looking dope. Hey, Jesus. Jeez. Jeez. Damn, this shit looks so fucking badass, guys. Look, I'm gonna post it on Instagram so you guys can check it out. The regular streaming setup, and then I'm gonna post the new one. Give me 1 second right now. Okay, what the fuck? This is on fucking man. Check this shit out. Just built this shit. Fucking dope as fuck. Alright, go ahead and take a video. So this is the streaming setup, which is the iMac. I'll probably end up selling it. And the new setup. Voila. Beautiful. Okay, of course we had to get the old school razor for sure. And look at that beautiful mechanical keyboard. Oh my god, beautiful. So this is the streaming setup. Beautiful. Guys, go check it out. Check it out on Instagram. And tell me what you think. So let's see what's going on here. GJ looks like it's breaking above that 154, 400 area. And if we stay above that area, look to the left, clean candle to the way up. Actually looking at this screen right now. Wow, this keyboard is fucking insane, guys. Go check it out. Check out the new setup. Let me know what you guys think. It's on my story. Let's send it in. Wow, I just got flashbacks. I remember when I built my first computer. I built it when I was 14, 15. Just to play fucking Counter-Strike. Imagine. Counter-Strike 1.6 at the time. So any computer would actually do. But fuck, man. I live in Queens, New York. All the way down to Rockaway Beach. Rockaway Beach. Alright, so let me log in. Who the fuck is calling me? Raja is my daddy's from the Bronx. No wonder why you so ratchet. Ratchet. Alright, let's see if I can pull up the charts here. Chart here. Oh, this is not even my account. What the fuck? Hello, hello, hello. We got more people coming in and posting this link, and I'm not able to access the Zoom, the Slack right now, but I'm gonna send it to somebody so they can post it here. Block detected. What the fuck? Oh, that shit. Fucking motherfucker. Alright, so this is what I'm gonna do. I'm gonna just have one screen here. Ah, what a mess. Okay. What I gotta do is I close this shit out. Just have one screen for now. Not now. Come on, bro. This is why I changed. Because this fucking iMac is taking forever to do anything. Settings. Yeah, it's like telling me to download something. Fucking Christ. Okay, got it. It's display. Sorry about this, guys. Just give me 1 second. Bear with me for 2 seconds. 2 minutes. I'm sorry. Boom, boom, boom. Display. And there you go. Arrangement, just one. Yeah, I don't wanna have this one. I'm gonna unplug this. Okay, perfect. This is it. Put this away and just concentrating on the Zoom for now. Okay. Yeah, man, you gotta stop spamming all that shit, bro. Like, it's all cool and shit, but then, you know, jokes like that. Anything that's related to family and shit like that, it's just not. We don't talk about it in any stream, at least us, right? Just demand a little respect. Bro, what the fuck? Hey, Celine, can you do me a favor? Can you post this on the Slack, man? It's not loading. Like, whoever the fuck wants to join. But, oh, man. I can't even post it here, man. Fuck. It's just not loading. Slack. Okay, finally got it. Okay, come on, load, bitch. Bitch. Okay, Asian session. I got it. Alright, so it's already posted in the thingy. So now we're gonna wait until everyone gets in here, and we can go ahead and go forward with the stream. I'm gonna admit everyone in here, and everyone please mute yourselves upon entry. Oh man, it's hot in here. Shit. It's a whole different mess. Okay. So I'm gonna be sharing the main screen now. Yeah, and he's sharing it, guys. Sharma looks like he's got a condom on his head. Condom, man. Alright, so you guys ready? See. Oh no, this is my MetaTrader. No, I don't want to share this shit. Let me share. Whiteboard. Yeah. I'm taking this shit out. Now my glasses got all foggy. Fuck. Okay, back to the meeting. Yeah, I don't need to see a stupid ass chat. Alrighty. Everyone ready? Alright, so I'll be doing this stream from the Mac. So for now on, if you guys, see a little slow movement here and there, it's because I'm probably lagging. But welcome once again to another Asian Sensation stream hosted by yours truly, Mac, and I'll be breaking down GBP JPY as we speak, going from GJ to gold after, and see if we could catch a trade maybe at 9 p.m. So far it's been ranging, really nothing we've missed, so don't feel any FOMO.
Ay, que Dios.
And fucking mute yourself, please. Okay. So let me delete this. So let's do the same thing, Wednesday. I get fucking hot. So let's go ahead and trade Dogecoin. Doge is at 41. Look at that, making profits. So GBP JPY. Let's go ahead and go from the daily to the weekly to the monthly. I want to go ahead and check the monthly as we're already halfway through the second fiscal quarter. Alright, see what's going on. This monthly candle, it's already halfway through it. And what's going on as we're reaching this resistance area, and we tapped, which is 154.800. We're rejecting it. What do we need to see? We need to see a nice close above that area, probably by the end of the month, for price to continue up. And look at this to the left. It's beautiful, right? Nice clean price action upwards to 185 if you're talking about month, down to this support here will be 176 and so on, right? Talking big numbers here. Okay. Alright, I'm gonna mute everyone, please. So if you want to talk, just mute yourselves, because this doesn't work. It's like a bunch of grown-ups, and we still don't know how to fucking mute ourselves.
Yeah, it's whoever's on the iPhone.
Yeah, Mike, snitch him.
Word up.
69 them. Oh. Not in that way. Yeah. Mute all. Yes. Okay, cool. So the screen is gonna be a little smaller, but that's fine. We don't need a bigger screen. Let's go down to the weekly now. See what's going on. You guys see the? Did you guys see the new setup? Better than a fucking Lambo, right? Yeah. The video card is not that good. You know, I'll probably upgrade it later. It's 1650 GTX. I was looking on an RTX 3060, but it was like $400 more. So man, I don't even play that much, so I really don't need it. It's gonna be definitely good for the stream. But yeah, I'm not gonna be mining Bitcoin or anything like that, so I don't really need that much. Okay, so back to GJ. GJ has been acting like a fucking bitch for the last month and a half. So since beginning of April, right? Hmm. Yeah. So yeah, beginning of April been a very tough range. Um, yeah, guys. So actually, no. Actually, this I remember this. This was a Monday, right? Actually, as soon as market opened on that Sunday, we had this nice little push up. That was the latest breakout, right? Prior to that, been shitty, 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 shitty. You know, we've hit that high again, came down to retest those lows at 149 again, and it's just really not much going on. Even if you look into the daily, even though we're still in a very bullish range, but it's still a range. If we count the range from here to here, it's only 126 pips, and this has been going on since that Sunday and beginning of April, which will be here, right here. That's when we had that high created, and that previous low, right? So let's say from here to here, 500 pips. It's alright for a month and a half. It's really not that good, So that's why when you hear people saying fucking GJ has been acting up, yes, that's why GJ's been acting up. So yeah, send me a text on WhatsApp, brother, so I can send you the link. Because I can't send any messages right now. All right, so what are we gonna see now on GJ? Basically, we're gonna just set up the regular parameters, see what's the no-trade zone, where can we take buys if the buys play out, where can we take sells if the sells play out. So what am I seeing here? I'm seeing this resistance here, right? So let me go ahead and move it up a little higher, which is coming from down here as well, and the next resistance, which is here. But it's a good range. If you measure this to here, it's only 9 pips, but upwards to the top of the range, it's 38 to 40 pips. So that's good. As long as we get a nice clean break above this area, 154.400, 450. So no trade zone will be here, right here. Okay. So let's just go ahead and say no trade zone. Alrighty. And let's make it a little smaller. It's fucking huge. A little bigger. Alright, cool. Okay. So yeah, no trade zone. You guys agree? So from 154.250 up to 154.439. So about 19, 18 pips. Okay, cool. Sales. What do you guys think about sales below this area here? Even though we have this nasty range, messy wicks, bodies closing with no wicks. It's a mess. So even on the 30-minute, we can see that it's a mess. But sales can preferably, I will take sales underneath 154.200 being a quarter point. So sales at the break and close of close below 154.200, and possible buys will be buys at the break and close of 154.430, 450. Yeah, Mike, drink the fucking water. I need to get some water, bro. I'm dehydrated. Alright, so buys at the break and close of 154.450 makes sense, and sales underneath 154.200. Going based off that quarter point, which can break and then get retested. Now in this case, if we get a volume push, we might jump out on an impulse trade. Basically, for an impulse trade, what I would like to see will be a breakup of this wick here on 30-minute. So if you want, what I could do is set up a buy stop here, right here.
So my only concern, Mac, with that
shoot. Yes, sir.
is if you look at the daily has a zone at like there's multiple daily candles at like 154 200s in area.
Yeah.
So what you may find is for a bit we pull all the way back into that zone again and then continue to drive. And then my other concern is because it's Friday, the weekly candle, you might get a pullback. So you might see a bit of a reversal today.
Oh.
Right? Because when you think of logically, when you think of candle structure, right? You get, if you were to break the weekly candle up into like say an hour candle or a 4-hour candle, if there's going to be a wick at the top, the last part of that candle is going to have to be a bit of a rejection, right? So in a weekly candle, if the last part of the candle is going to have a rejection, when is most likely the day that we're going to get that pullback? It's going to be on the Friday. So then what ends up happening is your analysis is more valid for buys for next week.
Right.
Because then what your assumption is that Monday will come, it'll pull down to create the new weekly wick down and then drive up, and then that's where you get the continuation. So it's something that I think people should just be aware of. Like if you tell the story with the candle and you say, okay, Monday pull back, Tuesday, Wednesday, Thursday drive up, Friday pull back, right? And then you do that for your weekly candles. So you'll say week 1 in the month, pull down. Week 2, week 3, drive up. End of the month, week 4, pull back. Right? So if you can keep sort of all that in your head as you're trading, it's something, as you get more experience, it's something that you pick up. But if you keep more experience with that, like if you just tell the story, you'll say, okay, you know what? Yeah, Friday, if this was, say, Wednesday's candle, I would agree. I would say, okay, we're going to probably drive up because we still have more liquidity to go through the week. But then because it's Friday, it's like there's probably going to be a bit of a pullback first. So it's just something to keep aware of. I think your analysis makes sense once we break that area, but it's just how will we break it? Like, will it come today or will it come maybe next week?
Right. And you know what happened right now is that I completely dismissed that. I'm still kind of getting used to it, even though I've been streaming since January. That today it's actually Friday, so
yeah,
I've seen moves to the upside, but we still halfway through the month, so it's still possible to move up. But now that you mentioned it, it makes a lot more sense to get that breather and continue down grab more
Just for a bit.
liquidity for a bit,
Right.
correct. Get back to that 154.200 area, which I have it tapped right here. And then if you want to swing it, it will be perfect just to get. Oh, sorry. Let me go back to the.
Yeah, no, but that's sort of the idea. It's like,
Right.
okay, next week we'll pull back and then go further up again, right?
Right. I was actually explaining this on before. How we're
Sorry.
creating higher highs and higher lows. No, it's okay. So yeah, just to give a quick reminder here. Basically, we had. Oops, give me 1 second. So we have this support here, right? Previous to that, we had this high created. And I'm drawing backwards, but that's fine. And we previously came from this zone here, right? So now we have a high created, a low created, and at that point, as soon as we broke this resistance, automatically this becomes what? A higher high. Hence, previous points and touches will become a trend, a bullish trend on structure. So this will be automatically a higher high, and this will become a higher low. And what are we going to be waiting for next? A retest probably to this resistance now turn into support, which can be here or it can be a little lower to create the next higher low. So very simple, that's how GJ moves, and we've seen that a million of times. So this is basically what we want to see again. So let me go ahead, give me 1 second here. We want to see this same scenario playing right here, right? This not that big of a, I can't say that it's gonna be that big of a weekly candle, but something like that, right? Just a bearish candle. Even if this one flips bearish, will be good to get some liquidity for price to continue down and hit that 53.00, or even a little higher, that 154 flat again. 154.200, which will be here, right at the top of these 2 wicks here. So somewhere around there. I can't be pinpointed specifically, but yes, that's the concept that I'm hoping for and waiting for this next higher low to be formed and created, and grabbed basically grab buys from here. Next area that I have above this higher high will be, which will be 156, I think 300. Give me 1 second, let me go ahead and just verify that, which we didn't tap, but we got close to it. So this right here will be the next target, right? 156, 380. This is coming from here, basically. So it makes sense. And I don't want to see no change of structure at the moment. I know, we still have a lot of room for the pound to continue up. It's just that it's just been moving crappy lately, and it is what it is. You have to adapt to the market, the way it's moving, and that's why we set ourselves up with these simple trades, right? So no trade zone, sells at the break of this, and buys at the break of that. Now that we're getting a breather, hopefully we'll get those sells and try to ignore as much as possible this noise here, and maybe get that retest down to 153 500. But yeah, I'm gonna set up an alert here, guys, and hopefully we'll get that break to continue down, or maybe we'll get another push before getting that breather that Ted was talking about. And now let's go to our favorite pair, which is gold. This is what I'm looking for right now. So now that we're basically on top of this whole area, right, which is 1874 major key. This is the 1 hour. So let me go into the 30-minute to dissect it a little better, right? We're still above this zone, right? We broke once, twice, 3 times. So this is actually the third time that we're above that area, 1874, 1871. And what can we target if we continue to move up? We can go ahead and easily scalp upwards to 1882, right? Or 1890. Finally, we'll get that 1900, right? Very easy moves. I don't think they should be complicated. What I would like to see at 9 p.m. I would like to see more rejection in this area, and I don't want to see.
It.
Yeah,
It's 9 p.m. now.
Yeah, it's 9 p.m. right now. So I want to see at 9 p.m. right now, basically this candle just rejecting here, right? Not breaking through it, not piercing through it, rejecting. If we go below and we close below, then perfect. You know, sales can play out. But as of right now, I'm looking for more of a rejection and then a bullish candle on the 15, maybe the 5 minute to continue up and break above this zone here, 1876 right here. So yeah, let's see.
Yeah, I think that's right. I was looking potentially to see sells all the way to 1871 or 1872 flat.
Okay.
Because there's a zone there on the higher time frames, on the 4 hour, and then a rejection from there to go back up. But my concern is the daily candles. We had a rejection again at 1883, and we drove down, and that seems to be a zone that we're tapping into each time, and then we're pulling away from to go bearish.
Right.
It's hard because it goes against my overall bias fundamentally, where you say, okay, there's inflation, printing of the dollar, things of that nature, but I think you might just get a bit of a pullback. But I do agree with, if we get what we're looking for, is I'd want a rejection from the downside, like you said, to go further up. And I think a safe play, if you are looking for a buy, I think, to be honest, you have a buy at like you said, 1876, 1877, and then you're going back up to like 1882, 1881. So if that's what you're doing, if you're looking for a buy, so that would probably be a very good trade.
Would be very safe.
Yeah, because at that point your daily candles basically flip bullish, and you have an opportunity to push, and you get a little bit of strength.
Wow, we're getting this sort of rejection right now, but we still have to wait and see how we close. Maybe sales can form. Imagine we go up here and create a top wick and continue down. So let's see how this formulates. That first 15 minutes of the hour is very crucial. See how we can get maybe a pierce through here and get that touch to 1870, 1871, like you said, to then continue up. So let's go ahead and just mention here, create this little zone right now, which is the non-trade zone.
It's just such a weird area to be in. Like, we're right in the middle of a range. So I mean, I would want to go with buys because of the fact that the daily candle finished bullish, and we would just fill the wick to the upside. But then the candle beside it on the daily is a rejection, right? So it might be like this is the last tap into the zone before we leave. And I mean, it's Friday too, so I mean, it's one of those things as well.
It's like, it's a reversal type of Friday, and it was a very confusing day yesterday, right?
Oh, you know what? Last night, oh my God, I felt like I was on the boat, like a Wolf of Wall Street. When he's on that when he's on the boat,
right? Everything was slow motion, and you don't know what the fuck is going on.
You know what? I got tossed around. I was in drawdown. I went back up. I was in drawdown, and I was like, at one point, I was like, just get me out of this trade.
Get me out, man. Just
get me out.
Just take my account, take my money. Just leave me alone.
Well, there was one point yesterday when I was trading. I think yesterday was one of my worst days trading in a long time.
Oh my God.
Because I had the worst entries at every possible point of where I was looking to take a trade. Like, remember I was telling you, like 8 p.m.
Yeah.
I got pulled up into a whipsaw. So I was in a huge drawdown. I had to get out of there, and I got out of there at 9 o'clock. And then I traded during the London session. I got tossed around like for a good 3 hours, and I finally got out of that. And then this morning, I actually had good entries and good trades, and then stupid me went back in again, and the same thing. I got tossed around, and I was just like, "What am I doing to myself? Like, this is ridiculous."
It's like,
like I mean, I think yesterday I did close to like 40 trades or 45 trades, just based on because I mean I'm not risking too much, but then you're basically scaling in and scaling out, trying to manage trades, pulling back in, pulling back out, and it was just I was like, wow. I looked at my history, and I was like, I just did like 45 to 50 trades,
and you didn't even notice that.
Well, it was more so the fact that the amount of work I did with all those trades, I think it added maybe 1% to the overall gain.
It's
So
like,
it was just like such a waste.
Where's my
Like I'm like,
commission at?
yeah, like I basically killed with commission. That was it. And it was just so funny because literally every position I got in, I was 5 minutes too early. Like, because if I had waited like 1 5-minute candle, which, because I normally wait for 15 minute to close or 30 minute, it was just like all of a sudden it just went the opposite way. I'm like, how did it just reverse 50 pips in 1 5-minute candle when, you look at structure and you're like, there's no reason for it to reverse over here.
No.
It just decided, like, it just like, hey, I'm good. I'm leaving this area. Like,
Oh man, I'm sorry. It's just
then
funny.
it was funny because truthfully, if I had not traded at 8 p.m. yesterday, if I had not traded at 8 p.m., I would have had really solid entries at 9. I would have scooped my normal, 2-3% with no drawdown, just regularly easy. But then because I had such bad entries at 8, I had to exit my trades with like minimal profit at 9, just so that, like I wasn't, if it reversed again, I didn't, because sometimes you'll see the market will give that opportunity. And I've learned that with gold, the market gives you the opportunity to get out because it'll wick up or it'll wick down.
Right.
And you're like, okay, this is my chance to leave.
To get out. Right.
Yeah, and then I'm done because it's going to continue in the same direction. And then what ended up happening was it totally reversed and it went further down based on my original bias. And I was like, okay, forget it. I'm not going to do that anymore.
This is actually, I think this is the opportunity for you to get out right here. That was it. This candle here, maybe. And this thing just wicked out all the way to 1870 again. So, at that point you're like, shit, I'm back into this little range here. So what happened next? That at 9:30 candle just pushed all the way down.
Yeah.
So yeah.
No, and I mean it's funny because people always ask me, they'll say, like, do you ever go through over trading or things like that? I do, but the other thing is it's not. I'm in control. Like I understand sort of the dynamic of the market, and I can say to myself, okay, there's fail safes. Like I know that the new 4-hour candle is probably going to reverse. So sometimes if I'm in a 5% drawdown, what I'll do is I'll wait for that 4-hour candle. And it's scary because it's moving against you, but then you're like, okay, keep your eye on the 4-hour, because as soon as that candle starts, it's going to switch direction for like maybe 5 or 10 minutes or 15 minutes. And that's your exit point, right? And I learned that just through history and through experience. And you get used to it where it's like, if you sometimes have that saving grace where other people would be stubborn and they would say, oh, well, now that we're going in my direction, I can capitalize on this more. And it's like, for me, if I'm in, a bad situation in a trade, I want to get out. I don't want to have now this idea of like, well, now it's going in my direction. I'm going to make now. It's like, no, you were sort of in a bad position for like the last hour.
Right. This
is your opportunity to get out.
Let it go.
Let it go. And what it does is it resets your mind, because then, because a lot of people would be panicking or, they'd be upset they're in a drawdown. It's like, for me, it's like, okay, I close all my trades and then I say, okay, you know what? I don't have to trade anymore. Like this was a mistake. Where did I make my mistake? I already knew when I entered. I was like, oh, this is just stupid. And then it was like, okay, you know what? I got out. I'm happy, right? But it's one of those things where you have to understand that a lot of times break even or just above break even is a win if you've been in a drawdown, and it's not trying to push it, like, try to extend it. Just get out.
And you can kind of see here, now you're talking about the 4-hour, which I hardly look at the 4-hour when it comes to gold. I look at the close and I look at the at the open. But now that I'm looking at this, right before the Asian session, you have this massive candle, and of course you're gonna expect a continuation down. What happened here at 8? You got that reversal. So yeah. And looking into the 15 minute, let me go back here just to kind of like revise the breaking point where you had to get out, which is, I think, is here, this one here, maybe that's right at 8:15, right? Yeah. So your Asian market open, you have that reversal, which is kind of like what I'm expecting here, but this is not playing out. We're rejecting, but now it looks like we're gonna close underneath that area, probably grab more liquidity and continue down here.
Well, you might find that it might actually drive right over to back into here almost.
Mm-hmm.
Like this candle will be, it'll struggle probably in this area here, but it may drive a little bit further down. I mean, once again, it's Friday. Like I did, like I said, I did enough damage last night. I'm not doing anything crazy this time, and
yeah, me too.
yeah.
I got some good buys today, so I'm pretty happy about my day today. Pretty happy, yeah. But anyway, if we see this break, under, and we see a close on the 15-minute, yeah, definitely I'll take a small entry. Not gonna lie, I'll take a small entry and see if we could target these wicks down here. But other than that, if we keep rejecting and staying in this zone, which is 30 pips, 1876 down to 1873, I'm not gonna risk anything for now. But yeah, it looks like we're breaking down here, just like you said. So this will be the perfect time to get into an impulse entry. But in my case, since I'm already done for the day, and if I want to take a trade, I want to go ahead and see a close below that zone that I have drawn out here. And this is coming from a higher time frame. So.
I think a safe close is probably a safe trade would probably be below. It's hard because everything's in a very, very scary zone. Like if you're taking a sell right now, sells will probably play out, like I said, to like 1872, but I don't think they're going to break through like into 1868, or if it does, it'll be temporary. Like it's very tough because the higher time frames have zones all in those areas, like between 1871 and 1868. That's very scary for me. When I think, as a tip for new traders, the scary part of trading is when you have an hour candle, you have a 4-hour candle, or you have a daily candle. Like if you have a combination of candles that are all wicked into that specific price area. Like on my charts, I see 4-hour, hour, everything wicked into like 1871, just below 1871.
Right.
And if you're taking a sell, you're basically driving into a zone where it can tap and reject at any given time. Exactly. And that's actually pretty scary. And because yesterday's daily candle finished bullish, that's scary as well, because it's like, if yesterday's daily candle finished bearish, I would have no problems taking sells and watching it drive further down. But because yesterday's daily candle finished bullish, it's sort of like, like there might be one more opportunity, like you said, to go back up and then come down. So that's where it's confusing, right? So there's times like this where you have, where the daily candle prints buy, sell, buy, sell.
Right. Just like
you sort of just stay out because there's not a clear direction, and you're playing with fire. Like there's opportunities, right? You'll get like small opportunities, but like I say, I always want to try and grab an opportunity where the range makes sense, right? So like if I'm looking at like a 60 pip range, I can then say, okay, I can easily grab 10 or 15 pips out of this trade, and I don't have an issue. And I can see that we have a clear trend. The 4 hours all in the same direction, the 1 hour is in the same direction, the daily's in the same direction. But with this current setup, it's like yesterday's daily candle screwed up everything.
Right.
Like if yesterday's daily candle finished bearish, I'd be like, yeah, sell down to like 1853. We're good. Mm-hmm. But because it didn't do that, it's like, like what are we going to do at this point? Like, are we just going to consolidate for the rest of the week and then next week start again? So it's really something, especially with gold, you just have to be aware of. I mean, there was a lot of big moves this week, so you might not get too much today.
No, exactly. And even if we, if we start heading down here, there's a lot of noise.
That's exactly it. Yeah, and that's your problem.
Right.
You have mess. You have a big mess.
Down to.
But the good thing is too, if you get down to 1870. Then you get a wick like this, and it looks something like this, where the wick forms here and then starts to drive up. Then you know that you're getting a candle that looks like this, or a candle that looks like this, right? So, or like similar to over here. So that's your advantage, right? So that if I'm looking at taking trades and I see price dropping down into this area again and wicking into this area, I'm salivating because I see candles that have a strong drive up, right? Because that's basically it. Because you're like, man, we just tap back into this zone. And as soon as we reject it, it's like, okay, we're going up now. And I can feel more comfortable holding that opportunity at that point. So these are little nuances and little notes that if you make for yourself and you look at previous candles, how they've reacted at that particular zone. And, like in this case, if we're looking for a buy, you're like, Oh, that's really good because look how strong those candles moved when they hit that zone.
Mm-hmm. Exactly. It's like a spring, right? You can get
Right.
that touch and then the bounce back. So yeah, we can basically replicate the same scenario here. So it could play out in this area now. So instead of being 1863, the lowest point will be now 1870, right? So get that touch down here and then a continuation up. But we first need that clean break below this area on a 15, maybe on a 5 minute, how it's doing right now, to tap here. And like Ted said, we're gonna have maybe a tap here. Perfect. Also, that's I think it's like 28 pips, I believe. So from here to here, 28. Yeah, 28. So as soon as it gets down to that point, 1870, that's your cue to close. Go ahead and close everything. uh, well, at least you secure your positions at that point. Um, yeah, the moment that this 15 minutes starts going underneath, breaking below this low here, I think that's a very good um signal for you to enter. And basically this will be your trade. You have your stops right on top of the previous 15-minute candle and your continuation up as it's breaking the low right now for price to continue down to hit at least 1870, right? So this will be basically the trade. I'm not taking it because it's risky. I was waiting for the first 15-minute candle to close under because right now I'm probably gonna see another pullback up here to retest and then continue down because I've seen this many times and I don't want to be stuck in a trade right now. And during the Asian session, when I took a lot from gold today, so it's really not worth it for me. I mean, I could get in with a small position, but I'm not really. I'm feeling way too comfortable about that. Just by the explanation that I just had, the moment that we start getting that rejection around here, that would be the basically kind of like wasted 30 minutes of my time just losing hair, right? Getting stressed out because if we don't break below this area and unclose, then it's basically a no trade zone for no trade day for me or session for me. Well, let's wait and see. Maybe on the 30 minute we can see something clearer, like a close, not just a break, a close below this area. Other than that, I think we're just getting that retest on the 5 minute upwards to 1874 for price to then continue down. Or we
I
might
think
just
also too, Mac. If you notice right now, yesterday, the day before, we had really good strong moves at 9 o'clock,
mm-hmm,
and it's like now like 9:15, well 9:18 or whatever,
and nothing.
and nothing's really happened. So you can sort of see the difference. So like if people are trading the Asian session, they're trading gold specifically, you can start to see the difference between trading on a Tuesday, Wednesday, Thursday compared to like trading now on a Friday, like because this is technically Friday in Tokyo, right?
Right,
So you can start to see a little bit of the difference where we're expecting all these big moves and everything's just sort of sitting put.
right,
So it's just something for people to look at is, yes, show up to the charts every day at the same time, but also notice the difference in volume in the way the market moves at certain days and be aware of that. Like I was sort of looking for opportunities right now because this is where I'll trade gold, but you can see like the market's ranging. It's not
mm-hmm.
really doing anything.
It's
So
done.
like you said, I'm not going to ruin my week by trying to get into the Asian session right now if there's not an opportunity. Maybe it comes at 9:30, maybe it comes at 10, but even still, once again, it's Friday, it's the last day of the week. Do I really want to put money on the table and go into the weekend with a loss or
No,
like a minor win when it's like
no.
I don't have any stress right now. I can flip on the basketball game if I want,
Right,
right?
perfect, and that's what we all want to do. Flip up the whatever channel you like to watch, and that's it. Call it a day. Because I know if I enter any position, it could be a penny lot. I know it's gonna ruin me mentally, right? Because
Okay.
I'll be I'll be stuck. First of all, I'll be stuck here, right? And if we get that close, which is what I'm expecting based on whatever parameter I set up here, which is a close what I'm hoping for underneath. I know this is gonna move super slow to the downside, right? It might hit my TP, it might not. It might, hit 10 pips, 5 pips, whatever. But why would I stress it, right? When I had a great day, I know one trade is gonna fuck me up mentally. It's not gonna fuck up my balance or my profits, but I just don't want to be in that position right now. I don't want to, that greediness to that call me and
Excuse
say,
me.
get those 20 pips in because it's gonna be an easy sell if we break below this area and close. No, I'm not gonna do it. I'm gonna stay. Just gonna stay and watch. Long term, I don't trade long term, but I wanna see how this next 4 hours is gonna close. If it closes bearish or it closes bullish, according to that, I can go ahead and prepare myself for basically the London session if I want to trade it. Other than that, I'll just not trade on Friday. But I want to see how this 4 hour closes. That would be major key. If we close above this zone here, then I can expect another small push to the upside. But like you said, we still need some liquidity, like this here, right? That would be perfect to see.
Yeah.
At least one, two, three, well, candles just rejecting this area here, 1874, and then we have a next maybe 1 hour or 30-minute closing bullish above this area, 1876, and then tomorrow morning during the New York session, I could be ready and say, it will be it's just gonna be a good chance for me to look for a buy rather than a sell.
Yeah. I agree, and I think too, like for myself personally, this week I've actually done really well. I think
Yeah.
I've done close to like I think maybe 8 or 9% this week.
Wow.
But it's just you sort of have to sometimes take a step back, and it's great. Like when I come onto these streams, sometimes it gives me perspective because a lot of things that I'll do. I mean, are a little bit more experienced. Like I said, I got into a little bit of institutional jet wash last night with markets going crazy.
In a yacht.
But it's like and then people are laughing in the chat. They're like, look, Ted's just like us. I'm like, of course I am. I'm
Of
human, right?
course.
Like, I mean, I try and maintain my discipline, but once in a while you go off track. But I'm not in a position where I've over leveraged or over risked my account. Like if I had closed positions last night, I would have lost I think like 11%.
Sheesh, that's a lot.
It is a lot, but then what it did, it just basically erased my gains for the week, right? I've already done close to 50% this month. So it's like, okay, so I would have just taken a bit of a hit. So it wouldn't have been that big of a deal because that's like, those are the things that go through my head is like whenever I'm in a position of drawdown, it's like, okay, I know where my exit is, my maximum risk that I'm willing to leave. But then I'm also doing that on the basis of I've already done really well for the month.
Mm-hmm.
I'm not too concerned about taking a losing day or taking a bit off my overall gain because I know that next week I can just build that back up. Like it's not that big of a deal because I'm not risking 40% of my account to win 10%.
No.
I'm not losing 10% every time I trade, and I'm not over trading. Like I wouldn't turn around and start increasing my lot sizes just to try and catch back. Like my lot sizes are pretty consistent in terms of what I do. So I think that's just more of an experience thing. But then like you say, you put things in perspective, and you just say, okay, well, you know what, like why am I going to try and chase another 3 or 4% today? I don't need to. Like I've already done really well, and that's something that if you have like magic keys, or if you have like like if you're on like a tracking system, like like a leaderboard or something like that, where you can track your stats, just step back and take a look at what you've done. And I'm like, yeah, like what am I worried about?
It's
Like I've already done a lot this month. Like why am I trying to do more? And it's like, why am I trying to push the opportunity? It's like next week there'll be bigger opportunities again. So like, why do this to myself?
That's like positive instant gratification, like going back into the leaderboard or whatever. If you use just maybe an NEA to track your progress for the week and seeing how much you've made, or if you do it based on percentage, how much you've gone up. That's good. It's always good to check, especially on Thursday nights, right before Friday. for example, like right now, that trade that that I just basically I'm calling out here, I'm not gonna take it. It's not because Ted talked me out of it. I'm just not gonna take it because I don't want to be stuck in here. I already made enough for today. Um, you know, I just I don't have the necessity. Back then, I'll take it. Maybe like 3-4 months ago, I'll definitely take it. I'll probably full margin it right now. No, I'm playing.
Hey guys, how are you?
Excuse me?
Can I ask a question here, Mac? Is that okay?
Yeah, go ahead, Sasha. What's up?
Thank you. Ted, hi, how are you?
I'm well. How are you?
I'm good, thank you so much. I have a question in regards to going in drawdowns. So, for example, yesterday you were stuck in a trade. That happens to everybody, and especially newcomers or somebody who's not as experienced as yourself more often. So, my question to that is you usually have a stop loss, right? That you put on, and like Roger, for example, as soon as it starts closing above the last 15-minute candle or 5-minute candle, however he is structuring the trade, he starts closing 50% and never manages risk very, very well. But in case if you haven't, so what are the tips? So what do you do? Do you hedge or do you let it go? Or what are the tips? You look for a return, and if not, then it might continue in the opposite direction way longer. So how do you manage it if it is in a drawdown like that?
Okay. So this is going to be a pretty complicated answer. What I'm looking at, especially because I'm just trading one pair, so I'm really focusing on gold. Like the last 3-4 months, I've just only basically traded gold. So gold has a lot of little characteristics that you can sort of take advantage of. Items like, a 5-minute wick could go up like 20 or 30 pips, right? It could bounce off a support and go up 50 pips, but that's not the overall move, right? So as an example, a lot of times gold can be very forgiving and it can be very violent to you. And in yesterday's case, during the London session, during the Asian session, I'll start with the 8 p.m. trades that I took. I was expecting sells to continue down because the daily candle from Wednesday. So yeah, last night was Thursday night's candle. So Wednesday's candle finished bearish, right? So you say to yourself, okay, there was a massive rejection from the upside. We should potentially start to fill the downside, right? And here's the mythology behind that is the fact that we have an indecision candle on the daily. So it's like, okay, if we're gonna go up, we need liquidity to go down. And if we're going to go down, we need liquidity from the upside. So in that kind of situation, you're safe in both ways because you can take sells and you can be right, and you can take buys and you can be right. The difference comes is how long is it going to take to get to either side, because you know that middle area on the daily candle from Wednesday finishing indecision but finishing bearish, more than likely we're either going to have a wick to the upside and a wick to the downside. So in between that body, if you're playing that in that daily range, you can say to yourself, okay, if we are actually going down, I need a candle to go up and then drive down. But because we're at a daily indecision from the previous day, I'm gonna err on the side of caution, and I'm gonna say we're gonna go down. So what happens is at 8 o'clock yesterday, I got into a trade. And literally, as I entered, the 5-minute candle started to fly up. I think it was like 8:05. Actually, I have my terminal open. Let me get the exact information. Sorry, it's just in my kitchen eating.
I'm so sorry.
No, it's okay. No
I think it was here.
Sorry, give me a second.
Maybe it was like around here. I think 8:05.
Let's see. I think it was. Oh, yeah, it was like 8. I think it was. Yeah, it was basically 8:10 yesterday at the 5-minute candle, and you can see there at 8:10 it just flew up, right? Because I got in at 1864. And then basically ended up closing at 1868, I think it was. Yeah, I think those were the trades. Yeah.
1864.
And then so basically it flew all the way up to essentially 1868. Actually, no, sorry. I digress. Yeah, no, it went. Yeah, so we were in at 810, and I was in at 1864. I had positions at 1864, 1865, 1866, 1867, 1868. And then basically what ended up happening was at 9 o'clock, we got the reversal we needed. So this was the thought process here is if the 8 p.m. candle is going to push up, we know that at the open at 9 p.m. and 9:30, where chances are we're going to have a drop because we have to think logically here, right? Because we know that the Asian, stock markets open at 9 and 9:30 Eastern. So if we're driving up, that's actually good. So but the problem is you have to hold a drawdown because you're saying to yourself, okay, if we're going up right now, that makes no sense for the market to open at 9 o'clock or 9 o'clock Eastern, because why would they want a bad position to drive up? Like it should be driving down. So technically speaking, what I was trying to do at 8 o'clock was I was saying to myself, okay, if the Asian open at 9 p.m. is going to drive up, we know at 8 o'clock we have to drive down. So as soon as I got in, it flipped on me and went all the way back up. So in my head, I'm like, okay, I'm sort of safe because logically speaking, like I just said, we should start to go back down. So now the decision comes, okay, I'm in the trade. What am I doing? Where are my outs? What am I looking for? So obviously I have my areas that I've marked up and I'm like, okay, providing we don't break like 1870, 1871, we should be okay. We should continue to drop further. And what ended up happening was at 9 o'clock, we pushed up a little bit and then the drop started to happen. So the positions that I had from like 1868, 1867 started to fill in profit. And then my worst positions at 1864 started to, obviously reduce in loss. And I was able to scale out with like a 0.5% win at that point, because I was on the basis of I'm risking 5% right now. I'm happy with that risk of 5% overall in my account because I've got like 6 positions open. But what I'm banking on is because of the fact that we had this push up, if we don't break above like 1871, we are going to continue going down, and I'm going to exit the trade at that point because now I realize the market is very choppy. Where I was expecting a full drop to then go up, it didn't happen. And then so as it starts to come down, now I'm like, okay, right at 9 o'clock, I know there's volume coming in, and the volume came in and started to push all the way down. Like the first 2 15-minute candles actually started to drive really far down. So I was good at that point. But if it had topped up to 1871 at that point at 9 p.m., okay, well, I'm out. But logically speaking, it doesn't make sense for it to continue to drive up after 8 o'clock because now they don't have good positions. The institutions on the Asian side don't have good positions to go further up. They have to pull it down. So I was in the right position. Like I said, at 8 p.m., I was expecting a pull down to drive back up at 9 o'clock, but instead the opposite happened. So if I had taken positions at 9 o'clock like I normally do, I would have had it perfect. I would have entries at 1868 with no drawdown because I would have said, oh, the 8 o'clock hour was a fake out candle, which I knew was happening at that time. It's painful because you're sitting there for 45 minutes going, really? How much higher can you go? And that's the scary part with gold is, yeah, gold could have probably gone up to 1871. And I was watching that very closely where I was like, are we really going to tap that resistance level and start to drive down? And you could see like the last 15-minute candle at 8:45 started to, get weak and it started to pull back. So I was like, okay, we're going to start driving down. And it's now what you're doing at 9 o'clock is you're jumping on your 1 minute time frame and your 5 minute time frame, and you're watching every little small zone that you're going through at 9 o'clock between 9:01 and 9:10, and saying to yourself at any given point, if those smaller candles start to create a rejection, that's the wick for 9 p.m. and you better get the hell out because it's going to continue to drive up. But instead, it just kept going down further and further and further. So I was like, okay, we're okay. And if you look at the chart from yesterday, you'll see that at 9 o'clock, the first two 15-minute candles dropped, and then right at 9:30, it flew right back up again. So I was already out, and that's the thing. In a half an hour, gold could change like 40, 50 pips. You got to get out because I wasn't waiting to see what was going to happen afterwards because I was already in a position that I was going to take a loss. The fact that I was able to get like a little bit above break even, I'm like, I'm done. I don't care if the trade had continued to go further down, I wouldn't have cared. My concern was I'd already taken a bad entry. I was managing my trades in terms of scaling in and scaling out, and it was like, I don't care about this anymore. Like this to me is like a no trade. Like this basically, like I tried to get a gain tonight, and it's like I'm not getting it. So like I'm out.
Makes total sense to me. Yeah, you're right. And it also depends on the timing when you're trading and analyzing all the situation you're in at the moment.
Yeah.
And if there is a chance to go back, sometimes it happens when I'm waiting like that too, and trying to make sense of it and hoping for it to come back. But last 5 minutes of the candle, they just make higher and higher and push a lot up.
That's right.
And then after that, it still comes down, but my heart at that time is almost about to sink.
Well, so that's just a little bit of the experience, the experience factor of understanding what's happening at the market. Like I wasn't worried about my positions because I already knew my exit plan, but it was more the fact that like, really, you have to do this now. Like that's sort of how like I get frustrated or I get angry at the market because it's like I know exactly what they're trying to do. Like they're trying to shake me out of my position, and it's like how much are you going to try and shake me out, right? And literally in 15 minutes it went from 1864 to 1868, and I'm like, really? Asian session, we go up 40 pips in like a 15-minute candle? That rarely happens at 8 o'clock.
Right, you're so right.
Yeah.
And it happens sometimes, and you're just in an awe thinking, really?
Right.
And it had to happen when I took a position?
Yeah, and that's what but the key is the critical thinking behind that is important because then you say to yourself, all right, this makes absolutely no sense at all. Because I looked through my charts as this was happening. I had my other monitor. I was looking through everything, and I'm looking through all the time frames. I'm like, there's absolutely no reason why this happened. Like, there's not a zone here. There's not something I missed because I had done the analysis at 6 o'clock to say, okay, this is what I'm looking to do at 8 o'clock. And then it just so happened literally at 8:10, it just reversed. And I'm like, okay, I know what they're doing. This is a pure fake out because a lot of times as a trader, as you gain more experience, you start to look and you say to yourself, this makes absolutely no sense. And it's true. It doesn't make sense. Like as you gain more experience, like that pull up at 8 o'clock on the 8 o'clock hour, you're like, why? Like it flew up basically it flew up about 50 pips in an hour when the whole previous like last 4 hours was in a downtrend. And you're like, really? That's the liquidity grab you're looking for? But then once again, it's my error because I trade at 9 p.m. I shouldn't be entering the market at 8 p.m. I was trying to get fancy where I was like, hey, I can take sells at 8. And then when it flies up at 9, I'll just take the buys and I'll catch both sides. Like I was being a little bit, hyper aggressive in that sense because I knew exactly what the market was going to do. The only difference is it did the opposite. So I should have been taking buys at 8 o'clock and then sells at 9. But instead, because I had sells at 8 o'clock, I had to wait for my sells to finish at 9. So at that point, I'm like, I just wasted almost an hour of my time just to get out a drawdown, right? So then you're like, okay, I'm done.
Yeah, you're right. And you're right in saying another thing that market does give you a chance to come out if you be wise and not just come out of your position at the very top. Because initially, as more time I'm spending on the charts, I'm trying to understand that sometimes you just give up when it's really, really going further high. But that means that's it. It's pumping as much as it can right now, and now it's going to go back. And that's what happens. So I be patient at that time and give it a chance to come back and come out either with a small loss or at break even or something like that. But it does give you a chance. So before I used to get very panicky and just close it at the max, and right when I close, it just goes back in the right direction, even with profits.
That's right. And that's the thing too is like a lot of times look at it this way. This is going to sound really bad, but I don't want people to take the wrong way. Whether you lose 3% or you lose 5%, it's not in the grand scheme of things the end of the world, right? So people are now going to, take these words verbatim and they're going to be like, hey, look, Ted just extends his losses. It's like, no, because exactly to your point, that extra 2% that I put on the table could pull me all the way back to break even in profit, if I understand what's happening in the market and I understand the dynamics. Like if I know, like, as an example, there's a resistance level at like 1871 as an example. If I'm at 1868, what's the difference between closing at 1868 and 1871? It's 30 pips. I'm already taking a loss as it is. But if there's a chance that the new hour candle is going to pull back, why don't I hold to see that new hour candle pullback, knowing very well those are the characteristics of gold? It's the same thing why we exit towards the end of an hour candle in gold at a high or at a low, because we know the next hour is going to potentially create a wick either up to the upside or the downside, whichever direction we're going, and then continue. But we don't know how big that wick's going to be. So in my situation yesterday, it was like, okay, yeah, we're going bullish at this point. Okay, if it is going to continue bullish, there's a high probability that we're going to get a wick to the downside that's going to come into this hour candle, which is going to cut my losses, and then it's going to continue to drive up. That's my goal at that point, to get into the middle of that candle or, see what happens. But it just so happened the new hour candle wicked up a bit and then started to drive down. So I'm like, okay, I might have saved myself here where, we got a little liquidity up on the top side to drive further down. It's a little bit easier to manage that trade at that point.
And the smart thing you did was taking another position at the top, because nonetheless, even if it is a continuation, if it wicks down, it will give you some profit to manage and, balance it out a little bit. And then you quickly come out of both the positions and then let it go.
That's exactly it. And, you basically, like I said, so you add another 1% risk, but you have a chance to recoup everything at that point. I don't recommend people do that constantly, because you shouldn't have to do like that kind of aggressive risk management all the time you trade. Like that was, like I said, yesterday was the first time in, I would say, maybe 3 months that I've actually had to sit here and been like, man, I really screwed up. Usually for me, it's like, yeah, good. And entry, exit. Yeah. Okay. This is pulling down to go up. Okay. I'm in the right direction. And literally that's what I was thinking yesterday. I was like, hey, you know what? We're going to go down. It's going to, here comes the wick. Okay. It wicked up a bit. Okay. It's starting to go down. Take entries as the candle starts to break. Oh no, it just flew up the other way. So then it's like, okay, I start to manage positions and I'll say, okay, you know what? Like I'll take another, I'll scale into higher positions on the anticipation that we're going to drop further down, because I know that, like I said, if we're going to create a wick to the downside to continue driving up, the wick isn't going to be the length of that candle. It's going to be half of it. It's going to be, 3/4 of it. So if I can get entries at the top part of that bullish candle, I can now take, sells, and I can just drive down and because gold moves 20 or 30 pips at the beginning of a candle, it's like I can get out of my positions and that will, sort of save me. But that doesn't happen with every pair. So you have to understand the characteristics. With gold, like gold can really mess you up that way, or it can save you. And a lot of times it saved me because I've looked at that and been like, okay, you know what, the new 4-hour candle is going to start and it's going to whipsaw the opposite way 100%. And it does, because it's creating a wick to continue in the same direction. But you're in the wrong side of the trade, and you're like, okay, I can exit. The problem is people are like, oh, look, it's going up now. I'm going to be able to win. And it's like, no, don't do that. Like when you're given an opportunity to exit at break even or just below break even, with a minor loss, that's your cue to take it. Right. I compare it to, like, if you're at the casino, right? A lot of people will turn around and say, hey, I'm down $300. If I get to break even, I'm going to leave. They get to like $290 and they're like, oh man, I'm $10 away from break even. They start playing some more. And then suddenly they start losing again, and then you chase and you end up losing everything. And then you walk out and you're like, man, I was like, what's $10? $10 is like part of my gas to fill up the car. Like, why did I have to try and chase that extra $10? It's the same thing at trading. It's like, yeah, you lose 1%. Who cares? You'll make it back tomorrow plus a little bit more. Like it's not that big of a deal. But the problem is when you lose, you know, if you lost 10% in one day and you're already down for the week, you've just punished yourself more, right? You've been like, man, I could have walked away with a 1% loss instead of walking away with a 10% loss. And you're like, why did I do that? It's like, now I have to work twice as hard, or, you know, I don't want to say 10 times hard, but like, you know, you have to get back 10%. And now you're going to be like, that's all it's going to be on your mind psychologically, where, you know, you take a 1% your loss, you sort of feel like a hero. You're like, I can make that back tomorrow. And it's like, soon enough, you just do it.
Yeah.
That's true. And this comes with maturity and with more time and experience, and then you get better and better. So these are the rookie mistakes I used to do. I'm thinking the more I'm spending time and doing simulations and trying to understand one pair just day in and out all the time and see how it flips and what's the behavior like. So, and obviously, you have to never, because I initially used to take bigger positions, and then I was like, no, there has to be sufficient gains and sufficient. So all those mistakes, and over the time, you learn a lot with these mistakes. That's true.
Right. You start to scale in little by little. That's what I suggest to everyone who's just starting. Instead of like going in with like bigger lot size, even though you have the capital in it, just try to like scale in with the small lot size, and you know, once you start catching that momentum and you ride the wave, like Ted likes to, you know, say, you know, follow the trend, and you should be okay. Specifically, especially and specific, you know, talking about a pair or an instrument, it will be gold. You know, you just ride the trend. Like this trade that was called, you know, 11, 12 pips. I didn't take it. It's okay. I'm not mad about it. I knew it was gonna play out the moment it broke the low around here. I was waiting for the 15-minute to close. But then again, I was just looking at my profits for the day. I was like, you know, I think I was up like 2%, 3%. So why am I gonna risk 1%? Even though it's gonna play out, I don't want to be in that position where I'm here, you know, closing the trade manually, you know, looking at it when I could just kind of like prepare for what's coming on tomorrow, right? Which is something that we talked about too. You know, this liquidity that's happening right now, and
and we said the same thing. We said that a safe sell would be to 1871. And then you would have to reevaluate because you're coming into like a major zone on the hourly. So if people took those sells, those were great opportunities. I think, you know, if you were able to get in there. For me, it was just a little too tight because I don't like the idea that I have to hit my exit on the head, right? Like, you know, when people talk about like to the pip, or, you know, I did this. I think that's the worst thing that you can do, because it doesn't give you any room for error, right? So the way that, you know, I've always explained, and, you know, when I mentor people, and I you know, all the previous students I've mentored, is leave room for error. Like, you're never going to get a perfect entry. So, you know, if you break down a trade into like a percentage, right? So you start with 100%. Right? And you say to yourself, okay, my range is going to be 40 pips. I've mapped out a support level. I've mapped out a resistance level, 40 pips. Right away, knock off 5 pips off that. So right away, you've got 35 pips to play with. The reason why I say knock off 5 pips, because your support and resistance lines are probably not accurate. There's probably a play there. So then you say to yourself, okay, we'll knock off 10 pips, 5 pips on each side. So my support and resistance lines I've drawn on my charts, that's not how the market's going to react. It's going to react close there, but not to the pip. So I've already taken away 10 pips. So now I've got 30 pips to play with, right? My entry is going to be, you know, like somewhat decent. Take away another 5 pips. And then my exit is not going to be the perfect exit, so take away another 5 pips. So in that instance of my range of 30 pips, or, you know, in this case, let's say 40 pips, I've knocked away 20 pips off of the difference between my support and my resistance. So basically, I'm saying to myself at that point, my trade where I had a range of a potential total gain of 40 pips, I'm looking to grab between 10 and 20 pips of that range. Because what that means is I'm sort of in the middle of it. Like, I'm in the cushion where it's like, you know, I had a really bad entry. I exited too early, but I was profitable. I didn't have any problems, right? So now when we look at the example over here that we're currently on with gold,
Give me 1 second.
and yeah. So when we look at gold, you know, and you say to yourself, okay, you know, you could have taken a trade, say on the 30-minute, on the 15-minute candle, you would have said, okay, 15-minute candle, we're probably going to go at 9 o'clock, we're going to go from 1873 to 1871, you know, 1871.80. So basically, you have a range of 23 pips. You really have to hit it on the head to get 23 pips. And you can see it rejects that level right at 1871.80 and pulls back. Count the spread of 3 pips right now during the Asian session. You're down to like a 17 pip range. Then you have to figure out your entry point, your exit point. Out of a 23 pip range, you're basically maybe going to grab 8 pips, 10 pips. Now think to yourself, that's a lot of work in that small range to grab 10 pips, where I can wait for a wider range and I can say to myself, okay, perfect. I'm going to, you know, I can now take 20 pips or 25 pips out of a 40 pip range or a 50 pip range where there's a lot cleaner traffic at that point. And the spread is better. You know, during the North American session, the spread will be like 1.8. It'll be 2. Like that extra pip makes a difference at that point, right? Where here it's so tight for you to get a perfect exit and perfect entry. It's a lot more work. So exactly to your point, Mac, it's like, you know, why am I pushing myself that way? And then I have to anticipate, if I'm going to take a trade, that we break below 1871. And then as we enter those zones on the hourly or even on the higher time frames, that we're going to break through those areas. But I mean, once again, if you have a good entry, you can say to yourself, okay, well, now I'm in profit, so screw you, Ted. I'm just going to hold my trade and let it run. But it's just trying to enter right now. And then you look at the 30-minute candles. Like if you look at 30-minute candles when you're on you know, right here, you can start to see right away when you look to the left, like what do you see? You see a whole bunch of zones, right? So it's like, are we going to break those zones? Like that's the key, right? And now you're sort of thinking to yourself, it's like, oh, this is not good, because essentially what's happened is we've come right into this area right over here. Right? So now we're dipping into liquidity, but more importantly, we were already in this liquidity area over here from previous. So now you're like, oh, this is going to be pretty dangerous. But obviously, if it continues, you get a win, but then you don't know where it's going to reject if it does reject.
Right, that's the thing, the rejection point. Like I stated before, you know, if we were to get that drop, you know, that one swift move down to 1870, the moment that it hits to 1870, I would just close automatically, manually, or I would set up my take profit to 1870.380, which is this zone here, because of these wicks down here, right? I don't want to risk it. Anyway, the trade was good. Was good. You know, I was just waiting for the 15-minute to close, break this zone that I have drawn out here at 1873, which it did. Got a little pullback here, not that much of a retest. This was the main retest. If you're one of those traders, not like me, I don't really go deep into on retest or get into a retest. But if you would have gotten here right at the retest, you know, expecting for price to continue down without the confirmation of that close, this was a 26 pip trade. So pretty much decent, right? And this was in 45 minutes. So 45 minutes were not that much, not what you usually see on gold, what you normally see on gold. But I mean, if you're willing to hold it, and you say you haven't taken any trades during the week, and you know you're there to take a trade for today. You know, you come in to the Asian session or whatever, the stream, and then you say, I need to take a trade today. Not that I need, but I'm going to, because if I see the possibility, I'm gonna go ahead and take it. Right? You gotta have the mentality. I didn't have the mentality today because I had taken trades today during the morning, and they perfect. They were all good, all hit TP. I made, you know, at least 2-3%, so I'm really happy about that. So, you know, I didn't have that, I guess, motivation per se to take a trade today, even though, you know, I even put it down here, you know, sells below that area and waiting for a close. Didn't follow instructions, but I had it there. So I'm actually kind of happy that I didn't take the trade, and it actually played out my way. So sometimes you don't have to take the trade, even though you see it, it's there. maybe you want to make that extra money, who knows, or maybe you like just to overtrade, but you get to that point when you start overtrading and then it gets bad, and I've been there
Yeah.
before, so that's
Oh
what I'm trying to
yeah.
avoid. But yeah, like Sarah was saying, you get that instance in gold. It's you always get it right. That the moment that it says "get the fuck out of it" already,
Hmm.
you don't want to be in it, right? And that's good. You know when to know when to get out, right? Especially during the 5 minute. I've seen it so many times happening. Like you see this jump up, and you're like, oh shit, mad drawdown, mad drawdown. Now it's flipping to the upside, and you're in a sell. It's gonna go ahead and jump that back down, and at least maybe get close by 5 pips, 2 pips, 3 pips, whatever. But you're gonna feel it. You're gonna say that, oh shit, this is my chance to get out, and that's the good thing about gold. Other pairs like GJ, for example, you don't get that much opportunity to get out. Yeah, it moves a lot slower than gold, anyway. But that's good to understand that you get the chance just to get out and not stay in it. And I think for today, really didn't move that much. It's the end of the week, and that's something that you gotta be mindful about. Like you said, right at the beginning of the stream, I completely forget about that, and thank you for the reminder. So I even wrote it down here. First, end of the week, always wait for the pullback, and I come into the chart and I'm looking at the date, right? I'm looking at the date on my Mac, and it says Thursday, so I'm not really thinking about Friday. But yeah, you're
Yeah.
completely
Yeah.
correct
Because you
about
can
that.
see like GJ did drop a bit over the last hour or so, right? So,
Yeah.
the buys would be probably later if that was the case. But it's just, I think the big takeaway from, tonight's stream, like for people, is always try and tell the story. Like I think you have to anticipate what you believe the market's going to do and why is it going to do it based on previous instances, right? So you don't have to look like to like the last 3 weeks, right? As an example, like really with GJ, I just looked over the last couple of days. It's like you've seen, the candles have dipped down, pulled up, dipped down, pulled up. And then you say to yourself, okay, well, chances are it's probably going to do the same thing again, to dip down, and then it's going to potentially drive up. But then you say to yourself, okay, the one little nuance in this instance is the fact that it's Friday. So, you know what, end of the week, we might just get a bigger pullback than usual. It doesn't mean that we're changing direction and going bearish suddenly, but it's like maybe today's daily candle will be bearish for a bit. And it's just because it is the Friday and we're getting a little bit of pullback from a weekly level. And that's just telling the story, right? Like every candle is formed on price, and it's formed in a way that, hey, at the beginning of the candle, why do we want an entry where we just left off? We want a better entry. So we're going to pull down a bit. As you go to the higher time frames, it's the same thing that happens. The pull downs or the pullbacks or the retracements are a little bit bigger. Your 4-hour candle will be like a 40 or 50 pip pullback, where your 15-minute candle is maybe only a 10 pip or 20 pip pullback, right? It's all relative to the candle that you're trading. And also understand, when you hit a certain level, like a weekly level, the pullback is going to be a little bit heavier than it would be on a 15-minute level, right? It's just, those are the nuances of trading. The higher the time frame, the harder it is for you to break support, the harder it is for you to break resistance. But the opposite is, when it does break those levels, you're in for a ride, because it's going to just continue, because now it's got the strength to break through a weekly level or a daily level. So those are little characteristics in the overall market. If you think of the market like a giant oil tanker, right? Your oil tanker's in the middle of the ocean. For it to turn, it can't turn like a speedboat. Your speedboats are your 15-minute time frames, your 5-minute time frames,
Exactly.
because at any given point they can flip on you, and you're like, wow, that was quick. Like we were going bullish, and now all of a sudden we're going bearish. But the overall trend is still the same direction because you're looking at your higher time frame, right? So if you use those simple analogies to give you an idea, you can be like, hey, the 15-minute time frame is going to be a little bit of a weaker confluence, but it's a speedboat. If it moves, it's going to move pretty quick.
Right.
Where your daily time frame is going to take its time. It's going to go through an hour or 2 hours of bullish movement. Then we're going to have an hour of a bearish movement. Doesn't mean it's changing direction. It means there's a pullback throughout the daily candle, and then we're going to continue to drive up. And learning that is basically just looking at a daily candle. How did that candle form? How did yesterday's candle form? What happened throughout the day? Break it down by the 4-hour candle, break it down by the hourly, and then if you want, you can go a little bit deeper into the 15-minute and 30-minute, depending on the session that you're going to trade, and see if there was an entry. See how you could have anticipated how this would have worked out for you. Or if this was way too complicated, well, I know to stay away from candles that look like that.
Right. This is another thing that I look into GJ, which is really, really clutch. For anyone who is new, if you, let's say, like, you don't trade the London session, but you come in after 6 a.m. Eastern time, which is, pre-New York if you want to consider it. Always look into the 4-hour. I don't know, always look at how the 1 a.m. candle closes and the 5 a.m. candle it's opening. For example, let's go ahead and see here, right? So we have the 1 a.m. candle closing what? Bearish? Yeah, here. And the 5 a.m. candle what? Closing what? Bullish. So that reversal, that happens about 80 to 90% of the time. So whenever you see that, expect a continuation up towards the New York session. And yeah, that was basically my entry for today. So it's good to know. So a lot of people don't know this. Usually, when London opens, throughout the London session, there is a reversal on GJ, and it happens a lot. You can actually spot it here quite often. See, for example, here, the 1 a.m. candle closed out bearish, the 5 a.m. candle flipped bullish, right? And continued down. Here, 1 a.m. candle closed bearish, 5 a.m. candle closes bullish, and continues up throughout the New York session. So, little things like that, always look out on GJ. And then start dissecting to the 15, 30, 1, even the 5-minute if you feel comfortable with it, to look for your entries, right? In this case, I'll try to look for the entry that I took today. It was on the 15. It's actually I was looking at here, I think. Yeah, because I know I was getting close to 154 and I got stopped out. I think it was here, right? Yeah. The moment we broke above this engulfment, right? So here, that was the entry. And then boom, it rejected it. As soon as we get to 154, that's when I closed. And then I re-entered again here. The moment we broke this bearish high right here at that point. And yeah, that was basically my trade for the day. I didn't hold it. I could have, but I didn't want to. And yeah, that was it. Very simple.
That was it. That was
it. That was it. As of gold, I got a very good entry here, I think. Yeah, like after 9. Yeah, right here. But after that, it got a little naughty here when it got to, I think, 18, almost 1880, 83. Yeah, 83. That 83 area, that was that rejection zone that Ted was mentioning too. If you look into the daily, you can see massive wicks to that to the upside. And they all end up at 83 to 83, from 83 up to 89. So 60 pips in here from that area. So now next time, what are we gonna do if we see price heading up that way? Just be mindful that we can get another rejection, or we might get just a wick fill and fill this whole canvas, if you want to call it like that, right?
Yeah.
But yeah, overall, let's see how this is ending right now on the 15. You see how this closed with no wick to the downside? We got really close to a 71 flat. We didn't, but overall, it was a really good move at the break of this low here. About 20 pips. And 20 pips for the Asian session, I think it's a lot.
It is actually, to be honest. I think that's the challenge. But you know what the good thing about the Asian session is too, to be honest, is things move a little bit slower. So if you're a newer trader, you can sit and watch things happen in like with gold as an example, like gold's moving very slow right now, but then you can play the game of like guess the direction, right? So like we said, okay, when we were at 1874, we're probably going to hit 1871, and it took us 45 minutes, but we eventually got there. Where like in the New York session or maybe in the London session, it would take maybe a 15-minute candle to move that far. But this is a good opportunity for you to sit there and learn, but learn at a slower pace where you're like, wow, gold actually hit the level that Mack and Ted called. Why did it do that? Okay, there was a rejection, like you said, the hourly candle started to move. Where did we get the volume from? We got the volume from 9 o'clock. We saw that at 8 o'clock there was a little bit of a pull up, but then 9 o'clock continued to drive further down.
And also 9:30 at the Shanghai Stock Exchange.
Yeah, that's right. So we had that, and then now we're in the 10 o'clock hour where it's like, okay, we'll get a little bit more movement. But if you secured profits, you would have secured profits towards the end of the 9 p.m. hour, and you would have had a decent trade of like 30 pips. It would have taken you 45 minutes, but it would have been nice and relaxed. Like,
right, we were talking, we were relaxing, having a nice conversation.
But yeah, and the thing is, like, if you had to exit, like, you wouldn't have had to scramble. Like, it would have been like, oh my gosh, it's moving so fast. It's just like it's on its way. It's just doing its thing.
Right. And that's another thing you have to be mindful of. Once you're trading during the Asian session, even though you're trading gold, it's gonna be slower than any other session, and you just gotta get used to it. But overall, the trade worked out. I'm glad if anyone took it, perfect. I'm really happy about that. That at least we got to that target for the day. As of GJ, it's still stuck in that range. I had set up alerts. None of them triggered, so I know nothing happened. This is a very not so good to be in range. I don't suggest anyone to take any positions right now. Even though this is closing with no wick to the upside, if you want, just wait for the next 15-minute candle to close below this area here. It's 200, so it's 250, quarter point, key level, whatever you want to call it, and just wait for a strong close below this area as it's. Oh, there you go. That's the alert. I'm not I wasn't expecting that, but there you go. You got it. Now, what do we need? We need instead of getting in with an impulse entry, even though it's 6 minutes in the hour, we want to wait. We want to wait for another 15 minutes. Basically, the same thing that happened with gold to replay with GJ, right? And then price to continue down. I think Ted also explained that looking into the higher time frames, and it's basically halfway through the month. We can expect a pullback on the weekly zone, right? So yeah, maybe we could get that that good pullback if we continue to close with no wick to the top here, and get that close below 154 to 50. That would be key to continue down to 154 flat, and preferably if you hold that trade longer to 153 600, which is down here. And looking into the higher time frames, so we were talking about creating the next higher low. I think it was on the daily, right? Higher low, yeah, right around here, right? So we have this whole space to work with. But first, what do we need? We need that close under 250. I'm gonna also set up another alert down below this area here. Now that I know that we're heading down, just to be safe, and I just want to see a close, preferably underneath these wicks here, right? These are 30-minute wicks rejecting the downside. So yeah, I just want to see that first, and maybe a touch or just a close on the 15 underneath this area. Like Ted said, also, if you draw a line, I'll try to get the rectangle tool. This is what I use for the rejection zone, if you want to call it per se, which is about 2-3 pips from the line to the upside, from the line to the downside, right? So you want price to react. When it's reacting, it's not gonna react just on a straight line, right? It's gonna react up and down, and it can react within the zone. That's why I usually do 3 pips here. 2 pips and 2 to the downside from the line down, right? But in this case, I would like to see this 30-minute candle 15 closing below this zone, right? This is a 4 pip zone right, yeah, 4 pips. 4 pips that I would lose, but I'll feel a lot safer if we close below that area, and knowing that this candle will be, hopefully will be closing with no top wick, meaning that there will be no range to the top, and I've seen that a lot. See, for example, here, GJ closing with no wick to the top and a continuation down, barely any wick to the top, continuation down. Same thing with a bullish momentum, right? No wick to the top, continuation down, and yeah, just wait for this 15-minute candle to close. Hopefully, it closes at least under 250, which is the key level, based on quarter points. Let me go to the restroom, guys. I'll be right back. We have a lot of people on Zoom, but just give me 1 second because I need to go to the restroom. I'll be right back.
No one ever needs to go.
Yeah, man,
You have to go. Right, party time.
Yeah, party. No, I need to go for real. Man, this
Dude, go to the washroom. What are you, a 5-year-old kid? Like, it's like, don't worry, the movie will not stop without you. You know, we'll pause the movie. You can go. Huh? Don't piss your pants. Jeez, Mack's like a 5-year-old kid. I don't want to miss anything. Guess you should have thought about that before you jumped on the street.
Quick question: is everyone out of gold?
Whoever was in it should have been out of gold. Because if you look right now, we talked about that on the 30-minute. There's a couple of wicks, and also on the hourly, you have a zone there where there's wicks that hit. So you have to be careful of that when you're at the hourly time frames. A lot of times when people trade gold or trade any pair, they try and extend their trade or hold it. You have to be aware of that. So you have to know that 1871 for gold. There's a zone to the left. You can see where there's rejections that went down and then gold started to fly up. So you have to understand in the story of the markets that price obviously went up, orders were taken, orders were completed, price goes down, and then price is coming to finish those orders. And that's what those zones are. Like when you see multiple rejection areas like that where there's long wicks, those are order zones where price is basically returning to. Some people call it like a zone to zone trade. So you have to understand that at that point, when you get to that level, you have to make a decision. You have to say, okay, I'm going to hold because I think we're going to break with momentum, or once we get here, I have to close. The worst thing that you can do is get to that area and not know what you want to do, because then what happens is the new hour candle comes, it forms, it wicks all the way back up to almost your entry, and then you're like, oh, this isn't good. Like now I'm at break even again, where it's like you could have exited knowing that the zone was there and said, okay, you know what, I'm comfortable taking my 20 or 30 pips, calling it a day. Or now what I have to do is I have to watch this new hourly candle break again below 1871, and then knowing that the wick that's created on the hourly, if that hourly wick continues and we push to the downside, you can now place your stop loss above the current hour wick and then allow it to continue. And then you can say, okay, where's going to be my next target based on, you know, like the higher time frames. And you could say to yourself, okay, my potential target, if we're going to fill, is going to be around, say, 1867. You know, we could probably get down to 1863 at that point as we start to continue. If that makes sense.
Yeah, it makes sense. Thank you very much.
No problem.
Maliit pa the
Hi, I've just got a question about gold.
Sure.
Yeah, so you know, like on the weekly time frame, gold, it seems like it's closing above 1875, which is where we've had the previous weekly resistance.
Yeah.
So if we close like strong above that resistance, do you think gold can potentially reach the next resistance, which is at 1900?
Well, it's not. Do we? You know, the potential of is there. The key thing is it's how the structure of your current price is, right? So when we look at the current candle, right, the current candle is like 1871, but the weekly candle is bullish. For it to go bearish, we would have to basically drop down to what's the number here that we'd have to drop to? Sorry, I just went back into my kitchen. You know, we would probably have to drop to like 1843 for it to go bearish, right? So once again, because that's not likely going to happen, and I've said this, you know, 3 or 4 times, and then it happens the next day, and I was sort of like, what? But I don't really believe, you know, if I'm a betting person, I believe in the fact that we're probably going to maintain a bullish structure to the end of the week. The rejection to the top is similar to like what we say with the other candles, where because we're at the end of the week, we have a bit of a pullback. That doesn't necessarily mean that we're going to start a descent back down or we're going to go bearish now. So what you may find is you're exactly right. There might be a pullback in the beginning of next week to create a bottom wick, and then it'll drive to fill the current space where we have, which, you know, we always say the wicks get filled in momentum. So the weekly wick that we currently have would get filled. And then the idea is the liquidity that was grabbed from, say, Monday and Tuesday of next week to drive up would then drive us past 1883 back into like 1900. So that would make sense. But more importantly, when you look at the weekly, there's a zone right at, say, 1911. So there's a major rejection area. So you'll see like a weekly candle, I think it is January, the week of January 3rd, you can sort of see that it had like a major wick to the upside at 1958 or so. And then it drove all the way down, and then that started the bearish descent. So if we're thinking logically, we had a support formed at 1700, basically. We had rejections at like 1685, and now we're going back up. So now if you're thinking supply and demand, our basic you know, sort of demand zone is at our supply zone is basically at the area of 1910, right? So chances are price is now going back to 1910 because we had essentially a demand zone at like 1700. So if we're using logic, price came down, or sorry, it went all the way up to 1950. It rejected that area. Orders were grabbed. It flew all the way down to, you know, 1685, which was the lowest point around there, or whatever it is, 17. Let's say 1700 for argument's sake. Liquidity was grabbed again. Support was created, and now we're driving back up. So you say to yourself, okay, well, where do all those orders have to go? So chances are the orders will come back into that previous zone. And where is that zone on the weekly? It's around, 1910 to 1928, 1950. So when you see next week's candle, chances are we're going to continue to drive. If we continue to drive bullish, that may be the opportunity where it starts to drive right back into that zone. And then what you're doing at that point is you're watching your trade when you get into the 1910 area, knowing that you're hitting a weekly zone, and you're like, okay, perfect. I have to really be careful in this area because that was a major rejection point to start the bearish trend again. So I want to be cautious about that, and I want to make sure that I don't hurt myself at that point. And then the further confluence to that is if you look at your monthly time frame, you have a zone between sorry, let's move this out of the way. You have a zone basically between, I would say, 1881 and then effectively 1967. So you know that the monthly candle is fighting to get into that area. So there's a good chance that you're going to fill that whole area where you went all the way down and then you drove all the way up this month, or it'll happen in June effectively at that point because orders are returning to that previous rejection point. And for people that are saying, well, how can you tell this is going to happen? Just go into your smaller time frames. Look at your 15-minute time frames. Those types of moves happen faster and they happen more often, so you get a key sense of how this could happen on the higher time frames as well. So that's where you would look and you would say, okay, well, how did you figure that out? You would say, okay, on the on like a 15-minute time frame, I've seen this happen 10,000 times. So on the monthly time frame, it's just going to take a little bit longer.
To make sense. Thank you. I appreciate it.
Yeah, no problem. Anytime.
Yeah, you mentioned something previously, and I think it was back in November, let's say. It was in Roger's stream, and he mentioned about like how specifically you only look to trade a certain candles, like mainly like the 4-hour, where there's like a clean range, and that's what actually really got me into gold. And like I don't really have to always trade on gold. It's only when the opportunity presenting it like itself, basically.
Exactly. And you'll see when those opportunities present yourself, you get like 60, 70 pips off that one trade, and you're like, wow, like that's the thing. And then what you're able to do afterwards is you're able to pull that into the smaller time frames and replicate that, but faster. So, when you get used to the higher time frames, that was one of the things that happened when I first started trading is back in 2015, 2016, we always traded off the higher time frames because they're slower, they were more forgiving. Our stop losses were a little bit bigger, but we're able to manage them because you could see, hey, if this 4 hours candle is going bullish, it's going to probably go to this resistance level, or if it's going bearish, it's going to go to this support level. It's going to take us a long time, but we weren't focused on the 5-minute time frame or the hour time frame. It's just like, hey, we'll watch the 4 hour and it'll gradually move to where it needs to go. Now evolution happens and you're like, hey, why do I have to sit and wait for a new 4-hour candle to start my analysis to do my trades? Can't I replicate this on the hour candle? Can't I replicate this on the 15-minute candle? And that's where you start to recognize that price action is identical in all time frames. It just takes a little bit longer and there's a little bit more noise through the higher time frames because a 4-hour candle is obviously 4 1-hour candles, and you may not have 4 bullish 1-hour candles. There might be a bearish candle in there, but that doesn't mean that the 4-hour candle has changed direction. Now it's going bearish. It's still going bullish. It just means that there's a breather in one of those candles. And all you have to do is go research this on your charts. A lot of times people don't do enough research on the charts and just look at the chart and go, how did this move? How was this move created? Where did it come from? What are some nuances of this move? This candle moved up 70 pips. What happened in that 70 pip move? If I was in this trade, what would I have been afraid of? Oh, that 15-minute candle rejected hard and pulled down. But where did it pull down to? Oh, it pulled back into that zone, but just a little bit above that zone. So, okay, future reference. If gold pulls back or, this pair pulls back, yeah, you know what? Like it's just a minor pull to continue moving up because it eventually did hit my hourly target or my 4-hourly target, and I can now manage my trade a little bit better in that respect. So I think as you become more comfortable trading, you spend more time dissecting the charts and becoming like a detective and saying, hey, why did this move happen? Not so much like, is my analysis correct? It's like, go through and see where all the big moves happened and understand how they did, and then try and replicate those at the same times with the same structure, things of that nature. It just makes it a lot easier for yourself as well at that point.
Yeah, thank you. I really appreciate that.
Yeah, no problem.
And with looking at the chart thing, can you tell me, I'm simulating these days, so I want to know, are there any tips that you want to give me, any specific things that you want me to look into while just practicing the strategy and trying to learn how the candle behave and how they're actually forming and what levels are there? So is there anything more to it, daily or any hourly thing?
You know what? Truthfully, I never did any simulation work when I was learning how to trade. Really, the only thing that I did, because when I started the trade, I was still working full time. So really, what I did was I looked at my charts before I went to work. I took trades before I went to work, closed trades, whatever. But then what I did was, before I left to go to work, I would write down on my phone in my notes, or like if I had a scrap piece of paper, I'd write down the pairs that I was working on, and I would give myself targets. And I would say, okay, like back in 2015, I traded UJ, USD JPY, and USD CAD. Those were the pairs that I traded. USD JPY moves pretty slow. USD CAD, I live in Canada. I know a little bit about the States, so I understand sort of what's happening economically and fundamentally. So that that gave me a little bit of an advantage. And it's like, okay, where do I see price going to? Like, I'd write down a target, and then I would check it at my break. I would check it at lunch. I would check it towards the end of the day. And if I hit my target, I'm like, okay, perfect. My initial analysis on why we were moving to this direction happened. And then what I would do is I would break that down afterwards. I would say, okay, I get home eating dinner. And as I was eating dinner, instead of sitting in front of the TV, I would have my laptop open eating. And I would say, okay, I said it was going here. Why did it go here? And I would say, okay, this, and this. Perfect. If I got it wrong, why did I get it wrong? Okay, back to the drawing board. Next day, do the same thing again. So I was always playing that game with myself after I finished trading. I wasn't trying to take more trades. I was just trying to practice the idea of like, okay, I think USD CAD is going to go to 1.25 or 1.3. Okay, it didn't go there. What happened? And I kept myself honest. Like, that's the biggest thing you could do when you're back testing or you're studying, is like, I wouldn't say, oh, I knew it was going to hit 1.25, not actually 1.3. No, I literally wrote it down and I was like, damn it, I'm wrong. Why was I wrong? Because then when it came to game time and when you're actually executing, you're comfortable because you're like, I've seen this play out before. I've seen it play out before. I just didn't execute on it. Now I'm executing on it. And that's the biggest hurdle people have, is they see the same thing happening over and over again, but they won't execute on it. And at the same time, it's like, you have to start executing. You have to get in the game, right? You can't sit and practice shooting free throws every day at the gym, and then when you get to the game, go, well, don't put me on, coach. I don't want to have to take a shot. You have to start taking shots. And yeah, you're going to miss a shot. You're going to have a loss. And the thing is, it's like, okay, if you had a loss, why did you have a loss? You have 2 or 3 losses in a row. Take a break, stop, go back to, playing that game of where are we going? Guess the direction, what's going on, do a little bit more practice, and then get back in it again and say, okay, you know what? Reset. I'm not going to make those same mistakes. These are the mistakes I made last time. And literally, it comes down to the fact that you're going to have a list of errors that you're going to make. I overtraded. I didn't do proper analysis. I missed this zone. I missed this entry. I didn't enter on the right time frame. I didn't enter in the right session. I didn't do this. I didn't do this. And one by one, you're going to knock off that error list. You're going to have less errors. And you're going to be like, okay, my checklist was proper session, proper structure, proper trade, proper risk management. Check off all those boxes, execute. Again, next day, execute. Okay, I'm comfortable now with 6 check boxes. Now I want to get into see if I can execute with just 5 out of 6 check boxes. And that's where you start to deviate from your strategy, and you can start to expand on it. You can say, okay, well, you know what? I'm comfortable taking entries now in the 15-minute time frame, where before I had to wait for the hour time frame. Now I'm a little bit more comfortable because I've seen the 15-minute move and I was like, man, I missed the move yesterday. I missed the move last week. It's like, now I can grab this move. Okay, I'm comfortable with the 15-minute time frame. Then you move into the 5-minute time frame, and it just becomes a comfort level over experience. But more importantly, it's how you're checking those boxes off every time you're taking entries. Every time you're working through the charts, you're always checking those boxes. And when I first started, I had that checklist. I had 5 check boxes. It was, right session time, right volume, right pair, right direction, overall trend, execute. And I needed all 5 of those things before I would execute. And then I got used to the fact that, okay, I don't really need to be, with the full volume. I could sort of take one with no volume. It's going to take a little bit longer, but it'll get to where it needs to go. So I would do that. Or, it's like, okay, I'm going to trade in this session, and then I'm going to exit once the session is over instead of exiting within the session, right? Things of that nature. So it's more so experiencing the market and working through the charts, and then actually actively being involved in it, not just mindlessly simulating. Because, you know what? You simulate, so what? It doesn't really give you anything because it's already previous instances. Why not work on current instances as well?
Thank you, Ted. That was quite helpful. I'm
No
taking
problem.
notes, actually. I'm going to rewatch the session again and try to learn and make the most of it.
Yeah, I just think it's important. It's funny because sometimes I forget that everyone's starting off like really like everyone's really brand new. Like there's a lot of people coming in, and it's one of the reasons why I don't mentor anymore. Obviously there's a lot of educators out there. There's a lot of people to mentor, but for me, it's a certain point where it's like it puts a lot of undue pressure on the educator to explain everything, and a lot of times explanations come with experience. Like I find that like people used to get mad at me a lot because people would give me a huge description of what they did, right? They'd say, Ted, I did this, 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 and this, and this. And I would say, okay, that works. And people would get frustrated because they'd say, well, that's all you have to say about that? I'm like, well, you just gave me the whole description. I agree with it. Like, I can't add anything to it. Like, you're so thorough that I can't add to it. So I always tell people, like, if you're able to sort of give me a scenario or an exact question and you're able to formulate that based on, sort of what you're doing, the discussion is a little bit better for everybody. Because it's like people send me a chart and they'll be like, so, this is the 4-hour time frame. I'm going to execute here. I'm going to exit here. What do you think? Yeah, that works. Like, you want a second set of eyes, you want validation. That's not going to get you anywhere. It's like, hey, I executed a trade here. It went into a loss. I noticed on the 4-hour time frame or the 1-hour time frame, I was tapping into this zone. I think that's where my error was. Do you see anything else that would, cause this error, or is there something I could have looked out for? And you start spot checking your trades and you start going through those. And I think once you start spot checking trades, you can start knocking off all the little nuances, like all the little errors that you're making. And it's like, okay, this is a little bit better, and it takes a long time. That's the other thing too. Like I tell people, like I think in my first year trading, I did close to, I think, 20,000 trades, 25,000 trades.
Yes.
Like I was trading every session. I was not sleeping. My health deteriorated. Like I was sleeping all weekend basically because I was up throughout the week working plus trading, and then I was sleeping on the weekend because I was so exhausted. But it's like, people are starting to trade for a month and they're like, oh, I'm not consistent. What do I do? Like, man, get through like 2 full years of the market first, and then you'll have that wealth of experience. And that's where your resentment to your mentor starts. You're like, oh, this guy just taught me the basics. It's like, no, you got taught stuff that shortened your time frame in terms of learning. Like I remember all the people I taught, they come back years later. Like I've had a few people come back to me years later that that have done well for themselves, and they're like, man, Ted, we're sorry. We just kept beating you up every time we were talking to you because you were like, this is all you have to do. And it turns out, yeah, that's all you have to do. Like anything that I teach, I do. I've experienced. I lend my experience out. Like, it's not I've read a book and said, oh, this is how it works, or like I've looked at someone else's charts and said, oh, that's what I do. It's like, no, I do specific things because they work and I've seen them work again, and they're very, very exact, very specific to certain events. And people are like, well, I don't believe that's going to work. It's like, well, it does, because I'm not a smart person. I'm not a genius. I always looked at my trading as caveman trading. Very, very straightforward, very, very simple. You draw support, you draw resistance. Market's going up, it's probably going to go to the resistance. Market's going down, it's probably going to support. Find the nuances around those areas and then decide how you want to trade. That's it. People are like, it can't be that easy. It sort of is. We're not sophisticated enough as retail traders to have all these tools, all these analysis, all this extra macroeconomic data, microeconomic data. We have it, but we can't analyze it. We don't have supercomputers. We don't have people doing statistics, back testing, risk analysis, all this stuff. All we're looking to try and do is grab a positive trade, like make progress, right? So I think we have to look at within our skill set. It's sort of like when you play a sport. Professional athletes have nutritionists. They have fitness coaches. They have mental coaches, performance coaches. They have, a guy that basically massages them. Like they have all these tools and all these things put to them to be the optimal. And then you're going over to your local arena or soccer field or football field, and you're playing pickup soccer or pickup football, and you're like, man, how come I can't do what like I saw the guy do on TV? It's like, do you know what kind of work they're putting in to get to that point? It's like you see the end result, and you don't see that it's like miles ahead, but it doesn't mean you can't be a good athlete. It just means you have to understand your parameters that you're in. Like we're good traders, but we're not going to be superstar. Like I'm going to go from this area to that area. I'm going to swing trade for the next 2 years. I think gold's going to $4,000, so I can hold. It's like it's not practical, right?
No.
Makes sense. That's so true. That's so true. You're right. Did you have a mentor too, Ted?
Not really. I mean, I worked in the industry for like 13 years, so.
Also, another thing about mentors and their mentorees, I guess, is that we all developed our own strategy at the end of the day. We kind of, pip by pip, if you want to say it like that, trade the same way our mentor or teacher taught us. It's impossible. You build your own strategy based on your personality, I'd say. And
that's true. It's just the initial discipline and things like those,
right,
in which you can get help. Yeah, right. And that just shorten the time period. You get beaten by the market mostly.
Right, that little bridge. It's what a lot of people need. That little bridge. As soon as you hear about Forex and you go into IML or something like that, and you get lost in the sauce, for a little bit.
The other thing is too, Mac, when people have mentors, the problem is we teach you, and this is the mistake I made when I taught a lot of people, is I teach you all the shortcuts, right? Like, you don't learn all the things I learned on my own. I tell you not to do. But sometimes people have to experience those pains so they know not to do it. Like I used to see people and they'd be like, oh, I'm taking a sell here. And I'm like, why are you taking a sell there? The market's bullish. Oh, but there's a pullback. I'm like, yeah, but there's not enough confirmation. Oh, no, it's fine. And then they get stopped out and be like, oh, this is stupid. It hit resistance and it didn't go back down. It's supposed to not break resistance. I said, who said that? They're like, well, you said every time you draw a line that, like if it hits resistance, it's just going to go down. I said, no. I said at that area, there's going to be a reaction. We have to observe and make confirmations on that. Yeah, but you always get it right. I'm like, yeah, because I wait for the candle to flip bearish and then I take a trade. Oh, well, you don't know what you're talking about. And then, you get this fight and it's like, well, maybe you should have experienced this for yourself and realized that, hey, the resistance line isn't technically a resistance. It's just a line to guide your eyes. And after a while, like I have markings on my charts, but my charts are very clean because it's like I can see a 15-minute zone within an hour candle. Like our chart. I don't need to mark it out. And as you get better, you don't need to mark your charts up with all these different Fibonacci trend lines, support, resistance. You can just let it be free and just have it there. But at the beginning, it's like training wheels. You start to take the training wheels off and now you're riding the bike fully.
Exactly. Exactly. And yeah, basically training wheels.
Yeah.
Um, yeah, that's why people ask me, why are your zones so big? Well, first because the line doesn't mean that we're gonna have the reaction right on the line. Completely. It's gonna be a flat line thing, right? That's why I draw a zone, and it's usually for gold about five maybe pips to the upside, five to the downside. Good enough, it's half a dollar, a whole dollar, right? And within that dollar, there's gonna be some sort of reaction, either rejection, continuation, or consolidation. Um, Here, it's probably coming from a smaller zone. Here, this is a big zone, so I know I know, that around that area, the reaction will probably be bigger, and we'll probably have something, some if it's consolidation, a bigger consolidation. If it's a breakout, it's gonna be a bigger breakout. Um, See here, this is also coming from a bigger zone. Here, from a bigger zone. Here, from a bigger zone. Then I start seeing within the 4 hour channels, the smaller ones, right?
Yeah.
But yeah, that's what it is. So
Yeah,
come.
and I think that's the thing. Like I said, years ago when we started trading and I was starting to teach people, man, we didn't have all these tools. We didn't have all these Zoom or these live,
No.
live streams, and there wasn't this information sharing and stuff like that. So but now as a trader, there's so much information on the internet, and through these live streams and stuff like that. If you literally spent the time and went through like different channels and stuff like that, you would really gather a lot of information. You technically don't need to pay for mentorship. Obviously, some people like that. It's like you go to the gym, you want a personal trainer. It doesn't mean that the personal trainer has to teach you how to lift. It just
Mm-hmm.
might be like little nuances, like you just need to check up on something. It's like, hey, can you correct my form here? Can you do this? And think about it this way: people that pay for mentorship, I always made it like my mentorship. I remember when I did it was like $300, right? Because it's like, why are you? Because the idea behind it is like people that make you pay over, I would say over $500 as an example. That to me was never fair in my mind because I was a trader. I was making money on my own. The other thing is too is if you deposit $300 into somebody, right, and you say, okay, you're going to teach me how to trade for $300. Now, the first thing that's on your mind as a new trader is like, man, I got to make that money back,
Mm-hmm.
right? So imagine if you spend $5,000 on a course or $2,000 on a course. Right away, the first thing you say is like, oh man, I got to make all that money back. So now you're in a $2,000 hole, and that's the first thing that you're thinking about. And for me, I always looked at it as like, I already make money trading. I want people to resonate or actually, put some effort into things. But then I also want them to have the flexibility of being able to make those funds back. And, a lot of people, I would say 75%, 80% of the people made their money back from my mentorship. It's just what happens. You overtrade, you over leverage, you blow accounts, and then suddenly now you get angry because
Now
you're
it's the
like, oh,
mentor's fault.
yeah, it's like it's the mentor's fault. And it's like, no, it's not my fault. It's like you were doing fine. It's like you got overzealous. Suddenly you thought that you were Superman, and it's like if you
Mm-hmm.
just continue on the path, you'd be fine.
Yeah, and that's what it is. It's simple. Just keep it down to simple terms, right? Don't overcomplicate. Don't try to sound smart. It's not gonna work. Just keep it simple. Support, resistance, supply, demand. Those like that. You want to see rejection? Wait for the North American session open. You might get that
Yeah,
rejection. That's it. Oh, cut your hours to that limit that tells you that's it. Mac, you're done for the day. Get out, go to the gym, work out, do something, but that's it. You're done. You're done for the day. And
yeah,
you open up your phone per se, and then you see the day because Market Watch closes at 5 p.m. Eastern time, and then boom, brand new day. Oh shit, new opportunities. No, it doesn't mean like that. Just because I'm streaming the Asian session doesn't mean I'm always gonna take a trade. The last trade that I took was on GJ, worked out fine. That's because I
yeah,
didn't take any trades earlier on. But uh, that's that's something that you have to work on as a person and as a trader because your mentor he's not there to do that for you.
yeah.
No, people got that the whole thing twisted. You know, a mentor. You're not supposed to. Don't call your mentor at 2 a.m., 3 a.m. saying you blew your account because you were trading the London session. Fuck doesn't. He's not your psychiatrist.
Yeah, that's the other thing too. I think a lot of people that do trade or that learn how to trade, they don't have the psychology behind it, and it's funny too because I see a lot of people that are and I like I said, I don't want to discount this, but having someone who's 25 or 26 years old try and teach you about psychology,
Right.
unless they've actually studied the psychology like in university or they have a psychology degree. What kind of life experience can someone at 25 give you to help your trading, right? Because I mean, they haven't really done. I don't think they've experienced enough in the markets to do that, and the same sort of psychology gets spread around these courses that people sell or people talk about. It's like, okay, have a trading plan, think positive, laws of attraction, and it's like that's not psychology.
Tony Robbins.
Yeah, like literally that's not psychology. Psychology is understanding what your triggers are. Like, why are you learning how to trade? What type of person are you? These are kind of self-reflections, and this is stuff that you have to self-study. It has nothing to do with building a trading plan or thinking positive or, having a vision board. Like I remember people used to say psychology is having a vision board. Put the stuff on that you want to aspire to and you'll get there. And it's like, that has nothing to do with trading. Like that's just for your own personal gain or for, to keep you on track. But psychology and trading is the reason why you're over trading has everything to do with greedy, has everything to do with chasing money. Now take a step back. Why are you chasing money? Do you come from a family that, is not in good financial standing? Do you have debts? Do you have a job that you want to get out of? Do you feel the necessity to validate yourself with other people? Like when you start digging inside of you and you actually start going through that and stripping yourself down, then suddenly all the things start to click. It's like, well, the reason I overtrade is because yesterday my parents told me that we didn't have enough money to pay this bill, and I'm stressed, but I want to be the hero of the family and say, hey, mom, dad, I made $500 trading. Here's the money, because my mom and dad have helped me throughout my life and they've supported me. And it's like, that's the wrong approach. And people get mad at me. They're like, well, you're supposed to help your family. Yeah, but you're also doing a disservice to yourself by pressuring yourself to do something when your parents have made the mistake. I mean, that's the truth. If you're in a bad financial situation at home, it doesn't have anything to do with you because they had you as a child. They have made decisions, or they have made, they have taken paths to put themselves in that position. Yeah, it's unfortunate. Don't get me wrong. I'm not insulting those people, but you should not feel guilty because your parents do not have the financial means to support you. They decided to have you. They've made conscious choices. You now have this pressure inside of you that you've created because you feel guilty because you're on this earth. It's like, no, it's the opposite. It's like your parents put you here. They have to take care of you to a certain age. That doesn't mean that you turn around and now have to support your parents. You can support your parents when you become self-sustainable. That's the difference. Like, this is where people's mindsets have to shift. Is, it's the same thing when you're on an airplane. What's the first thing they tell you on an airplane? Put the mask on your face first for yourself, then help the person sitting beside you. You have to live your life that way. It sounds selfish. It sounds bad, but it's the truth. Because look at it this way. If you can't help yourself, how are you going to help someone else? How are you going to think about someone else when you don't even have your life in order? You can't do that to yourself because it puts undue pressure on yourself, right? And the choices that you make affect the rest of the choices that you're going to do in everything else.
Been
And I think that's where people make the mistake from a psychology standpoint, is like, I need to trade today because I need to make money, because I need to pay things, I need to do stuff. And all that happens is you lose more money, you dig yourself a bigger hole, and now suddenly you're in debt. And you're like, okay, now I got to trade to pay this debt off. So I'm going to redeposit $500 and I'm going to trade smart. I'm going to be smart today, Ted. I'm going to trade smart. And what happens? I can tell you, and I know that the Gulag chat is going to laugh. You put $500 in. The first week you make $600. You make $150. You make $500. You end up, your balance is $650, and you're like, yeah, I got this. I'm on my way to $1,000, right? So you keep going. Next week, you have a little bit of a rough road, but you make $100, and you're like, okay, I'm still good. I'm up $250 in my account. Third week comes around, the market consolidates. You're pressing. You're like, oh man, I lost $20 today. That's okay. You know what? Ted says it's part of the market. You're not going to win every trade. You're not doing it. Next day, you take a $60 loss because you were hoping for the candle reverse. Now you're down $80. The $250 you've made over the last 2 weeks, you're down now to $170. And you're like, okay, I got to be smart tomorrow. And what do? You're like, hey, if I turn around and I say to myself, I'm going to increase my lot size today because I see the perfect setup. I'm on the live streams. I hear them taking these trades. I'm going to add positions because, these guys, whenever they do analysis, it's pretty spot on. And I agree with their analysis.
Right.
Today's the day they lose the trade. So and instead of losing 3%, you've lost 6%. So now you've lost another $30.
And you get mad at them.
You get mad at them. So you're like, man, I don't need this live stream. I'm going to do it myself. So when the live stream closes, because there's no trades, it's been a bad trading environment, you go and trade. Now you're back to break even. So now you're pissed off because you're like, holy cow, I was up $250. Now I'm back to 500. And then what happens the next day? You blow your account because you're like, man, I got to catch back that $250. I was up $250. Now I got to try and catch it back. Now I'm losing. Well, I'm down to my last $200. Might as well full margin my account and see if I can double it up or just close it all together.
Right.
And now and effectively in 2 months, you've lost $1,000. And you started off really good at the beginning of the month because you were disciplined, you were focused. But what happened? You started to go down that spiral because you're like, hey, I'm losing. I'm panicking. This isn't working out. I have nothing else. This was supposed to save me. It's not saving you. And you put so much pressure on yourself to save yourself. That's exactly what happens. And you blow your account and you do it over and over and over again. Now you're $5,000 in debt. What's the point of making a $500 deposit? You can't get back $5,000. No. So what do? Hey, I'm going to borrow a loan. I'm going to borrow some money. I'm going to, max out my credit card. I'm just going to go for it. I'm going to deposit $5,000. I can make $5,000 back because, with $500, I made $250. So with $5,000, I can make $2,500 and I'll be even better disciplined because I'm making more money faster and I don't need to do that much. I just need to take 1 or 2 trades a day. And the same thing happens, and it's a cycle. It's
a revolving door, to be honest.
Yeah.
You go in and out, in and out.
And that's the problem is people do that, and it's a cycle, and they don't realize it has nothing to do with your ability to trade. It has everything to do with why you're trading, why you're making the decisions you're making. Because look at it this way. If everyone got $100,000 right now, and this is the thing with FTMO, right? Everybody puts in $1,000 or whatever the number is, and then they get a $100,000 account. And what's the first thing you say? Life is good. I've got $100,000 account to trade with. Man, I can make $1,000 a day easy. And you know what? That $1,000 a day, I'm going to make it, run it up. You know what? I've seen people make $20,000, $30,000 in a month. That's going to be me now because I finally hit the good spot. I got my FTMO account. I got my funded trading account, whatever funding program you're using. Now I'm playing with the big boys. You're still gonna make the same mistakes because what's going to happen is you're going to make $5,000 in a day, right? Trading properly, and then you know what's going to happen in your head? Man, I made 5,000 today. Tomorrow I can make 5,000. Wednesday I can make 5,000. Thursday I make 5,000. That's $20,000. Man, $20,000. Perfect. That means I'm going to get 70% of that or whatever percentage I'm going to get out of that. Man, I'm going to get,
right.
14 grand.
Let me quit my job.
14 grand. And I get to quit my job. I'm going to be trading FTMO or whatever funding program forever now. And then, oops, hit the risk target.
Yep.
Made a mistake. Oh, account's canceled. Now you just blew more money. You're frustrated because you had the money in your hand. Now it's gone. Your whole psyche is gone, all because of the fact that you're looking to chase money and you haven't set yourself up financially before you started trading. Or you were rushing the process instead of doing simple 0.5% a day, 1% a day, taking your time, allowing time to progress, understanding this is going to take 1, 2, 3 years to get to where you need to be. Instead of blowing $5,000, $10,000 trading, you've only blown $500, maybe $1,000 trading over the last year. not a big deal. You've learned a lot. You've practiced a lot more than you've traded. You know, you have a job, you're working. Yeah, your job sucks, but it's okay because the job pays the bills.
Yeah.
You're not, listen to it this way. You're not supposed to be happy in your job. The reason why you're not supposed to be happy in your job is because of the fact that if you're happy in your job, you're not going to want to progress. If you love your job, why are you going to want to leave it?
Mm-hmm.
The idea is you're supposed to be angry at your job every time you go to work because that gives you motivation to get out of there. You're like, hey, these guys are just paying my bills, but I'm practicing my trading. I'm getting better. Eventually, I won't need them anymore. But I got to be smart. I got to keep paying my bills.
At least
I got to
now,
use,
right?
use this as a support system, slowly grind. And when my income starts getting replaced by trading, then I'm out of here. But I'm going to stick at this job because I just want to prove to all these people I don't like at this job, my boss I don't like, the stuff I do here I don't like, that I got out and now I'm a champ. That's what you should be doing. Go find a job you don't like. I guarantee you, you'll work so hard at trading, you'll be getting paid at your job. You'll quit your job within the first year because you have worked so hard at trading because you're like, man, I don't want to do this anymore. This job sucks.
Yeah, exactly. And let me add up to that about the funding accounts, the funded accounts. A lot of people that they just treat the accounts like, you know, they're real accounts, which is good because, you know, you start getting that emotion, those emotions per se. But I mean, you're 20 something years old, you want to go ahead and get a funding account. I totally get that. I mean, you're not a guru, you don't have to prove anything to nobody. You just want to make that extra money on the side. Perfect. Want to go ahead and sign up? Perfect. You know, do the challenge things. Go ahead and do it. But why do you buy $100,000 account? Well, what's the point on that when you've never seen $100,000 before? You've never done $100,000 in sales. You've never managed $100,000 before. It's nonsense. If you haven't had that much money to manage before, what makes you think that because you have a trading account with that much capital in it that you're gonna be an expert at it when it comes to your risk management and basically your P&L overall? That just doesn't make any sense. When you have other options, you can start lower. You can start at $10,000. I think there's a company, FTMO probably does that. Funding talent per se. I think they do $25,000, which is the lowest one, and that's still good. $25,000. What else do you want? I've seen.
Well, the other thing is too, people are really enthusiastic about these larger accounts now because they see that there's a potential way for them to get out of the situation that they're in.
Right.
I don't agree. I don't disagree with that. Like, you know what? If you want to trade funded accounts, people blow up my DMs all the time saying, "Ted, why do you say this? Why do you say that?" It's my opinion. I know the psychology behind what they're doing. They know that 90% of traders fail, so they know that they're not going to pass the risk management. They know they're collecting easy money. They also know that the traders that are actually profitable are going to make them money on top of it, right? So when you think about it in full logic, I mean, it's a money-making machine.
Yeah.
There's no denying that. I mean, it's a great business model. Other people now want to copy that business model because they see the same thing. I get DMs all the time. People, I failed this funding account challenge 6 times. 6 times $500 is $3,000 in their pocket for what? There was no risk.
Christ.
They were trading a demo account. There's absolutely no risk
No
to the
risk.
organization. They're just you're basically at a carnival trying to win the prize. You're like, hey, shoot the basketball in the net. If you hit the net, you get the prize. Okay, we've got a whole bunch of prizes here. Come right up. One by one, everyone shoots a shot. Oh man, we got to give away a signed jersey today. You gave away one signed jersey, you just made $3,000 in people trying to shoot a basketball. It's the same thing with these programs. There's nothing wrong with that. That's the business, but I don't want people to think that these people are doing this out of the goodness of their heart.
No, they're not.
They're not. It's a full business program, and you have to understand the dynamics, right? It's perfectly okay if you want to do it,
Yeah, no, I totally agree with that. It's perfectly fine, especially if you want to have access to a larger capital and, well, even though it's not yours, but it kind of gives you that sense that you're working for a company per se, and you don't have the rules that you have to go in at 9 a.m. and get out at 5 p.m. Whatever, you work on your time, you do it on your time, you trade on your own. But why going why going with these ridiculous amounts of money that it's not even real money. It's just it's a display, and then
Yeah.
you have to adjust to your risk management. Your psyche is gonna be completely fucked up because the same drawdown that you were having before on your regular $1,000, $5,000 account, now it's being multiplied times what 25. Doesn't make any sense. Like, I get it. You want to get the bag. Yeah, go ahead and secure the bag for all I care. But, just start with a lower amount, build your way up. If you cannot trade, you said this 1,000 times. If you cannot trade a small account, what makes you think that you're going to trade a bigger account just because you have
Yep.
more room to work with? No. At the end of the day, you're still gonna blow it. Because you're
Yep.
not gonna do the same. You're not gonna do the calculations to know what's the risk on a $25,000 account compared to a $5,000 account, then compared to 100,000 to 200,000 or even $300,000 accounts that I've been seeing lately. It's just insane. And then I have people asking me, "Oh, Mac, and you think it's smart to go with this and that?" And I'm like, first of all, you don't have any track record. I don't have any track record, so I can talk about that. But if you can show me that you've traded, that you've maybe for a whole year, oh, couple months actually, you've traded that big amount of capital, $100,000, $50,000, and you've been profitable throughout that time period. Yes, go ahead and try it out. Give it a try, right? Give it a try. But realistically speaking, if you've never, in business, sales, whatever you do with your life, you're 27 years old, 28, maybe you've made that much money before, your adjusted gross income was at $500,000 before, good for you. So that money, it's not fucking pocket change. It's a good amount of money. So treat it as it is. Don't think that, because it's $100,000, I'm gonna have a lot more luck per se to make more money. No, it just doesn't work like that. The risk is still there. You're just gonna have to adjust to it, and if you don't, you're just gonna blow the account regardless. You're gonna hit the max drawdown limit for the day, which is 5%. 5% on $100,000. That's $5,000 easily. You could do that on gold with a 5 lot easily. You get those $5,000 in drawdown in less than a day. But yeah, people don't take that in consideration and just say, "Oh shit, it's $100,000, and I'm gonna have a lot more room to work with, this and that, and then the payouts are gonna be a lot bigger." Okay, well, first, you to do the whole thing, get funded and whatnot. They only do it for 1 month. Well, after you get funded, you get it for 1 month, and then you pay a fee after that. If you don't blow your account, perfect. You keep the account and you get paid what after the month. So it takes like maybe 2 months to get the whole thing going and get the first payment paid out to you, and then there's always going to be a problem, right? Your PayPal address doesn't work. it's always some bullshit. But yeah, I just don't get it. Stick to a low amount, and then little by little, you build confidence. Then go buy the $1 million account for all I care. But first, you know, do the amount that you're comfortable with, that that in real life, if you had that much money and you were to trade it, you're not gonna act foolish and gamble. Basically just gamble the whole thing away. Just treat it as real money. That's my point. Just treat it as real money. And if you've never had that much money, you've never seen that much money, you've never dealt with that much money before, don't trade it. Go with something lower than that. And I think it's a good idea to access that capital, even though it's not technically speaking real capital, that it's coming from a hedge fund or whatever. It's still a demo account, but treat it as a real account. Try to feel those emotions, because at the end of the day, what's gonna happen is that you're gonna end up gambling, and that gambling is gonna most likely put your account into that daily drawdown limit and blow it, and that's it. You're done. Your $600 are gunzo. And what are you gonna do again to revenge trading? You're gonna buy another account, and that's how it goes. It's the same thing with real with trading with a broker and real money. You're gonna deposit the money. Monday comes around. You're gonna be like, oh shit, I might do another redeposit. I think Monty even has a term for that. You redeposit Tuesdays, because you're going to Sunday open, boom, you start trading. Monday comes, blow your account. Then Tuesday, what happens? You redeposit.
So, hey, it's all good.
It's all
All right,
good.
well, I'm gonna jump off.
Yeah, me too. I'm gonna head out. I think this trade was perfect. I think it was a great session today. Thank you so much, Ted, for showing
yeah.
up. 1870 on the dot, right on the zone, right? Perfect. So this is basically the confirmation for buys to ride it to the moon, guys. So no, I'm just
starts
kidding.
to move, yeah.
Yeah, just kidding. No, it's but yeah, beautiful trade. I'm gonna go ahead and call it out for the day. Thank you guys for showing up. Thank you again, Ted, for the breakdown. I'll see you guys next week. I'll be on the stream tomorrow morning as well. And beautiful. Bye bye. Sasha was here too.
Guys.
Thank you.
Bye bye.
Bye bye.
Thank
Safe,
you.
everyone. Bye bye.
Appreciate you guys, man.
Yeah. Mitch.